Good morning. Morning, Jim, Rob, Andy. Good to see you. Whoo, welcome to January 30th, 2025, guys. Everybody hear me okay? Got the volume on? Got your listening ears on? It's like romper room. Awesome. Good morning, Erla. Guys, checking news like we always do, right? What's going on in the wonderful world of news releases? Well, at 8:30 there was a big one, and that market spiked. It went all over the place. So I didn't know if it was going to go up or down. I didn't know if they were going to fight or if they were all going to agree. And hey, good morning, Cav. So I come to forexfactory.com/calendar. I do it every morning. As my charts open, this is my first stop. And I look for high impact news, guys. I look for those red boxes first. And it doesn't even matter to me. I don't read the words after it. Couldn't care less what the news is. But I know that when it's red, when it's high impact, the likelihood of the market being erratic is pretty high. And I choose not to trade. We also have medium impact news, which is the orange boxes. So at 10 a.m. today, we're going to have pending home sales. And it does have the potential to make the market move a little crazy. And again, in my own personal trading plan, I choose not to trade during medium impact, during high impact news. You may have a different approach. That's entirely up to you. But knowing where it is gives you the advantage of not stepping in front of an emotional freight train. Good morning, Steve. From forexfactory.com, I'm going to take you guys over to the Nexgen website, guys. Everything that you need is here. All the answers. Really, whether it is trading rules, what it looks like, all that good stuff, and then the software guide. This is your NinjaTrader how-to. So if you're newer with me and you're working through NinjaTrader, make sure that you go through that software guide. Almost any question you could have about it is answered. I will always answer your questions in the room. Don't hesitate to ask. But I'll also point you out to where the answer is off hours. And that's always in the software guide. But the trading guide, this is where the rules, the looks, the reasons, everything is in the trading guide. I regurgitate everything from this guide, and it makes me look smart, but this is stuff that Nexgen's been doing long before I was here. Nexgen's been teaching people to day trade for the last 28 years. I've only been doing it for about 5 now. So I do the same thing every day, guys. I talk about the same stuff every day. My life revolves around advantages and patterns when it comes to day trading. So every morning I am laser focused on what we call a high probability trend trade. And this is for you new users. This is a trade that typically wins 70 to 80% of the time, guys. And this is a trade that creates confidence with that memory of success. And this is your beginning trade. This is your foundation trade. This is your first trade. This is not your only trade. And we focus so heavily on this trade for an entire hour every day because this is the trade that teaches you to read your indicators. And that's exactly what I'm here for. I'm not here to tell you when to get into the market. I'm not here to tell you when to get out of the market. I'm here to teach you how to read your indicators. And then when you're reading your indicators, you'll be able to make great decisions. You'll know whether your rules are met, whether or not you have the advantages you need. So let chart reading be your priority. If you are brand new, if you are old school, coming back to get consistent again, let chart reading be your focus, because it's about 90% of your day. There's a lot of sitting on your hands doing nothing. There's an awful lot of video poker off to the side, Scrabble, whatever you do. I've got a sketchbook on my desk. 90% of my day is doing a whole lot of nothing. 10% of my day is entering the market and managing that trade because I have an advantage, because a pattern has presented itself that has been proven to win more than it loses. So that's what the high probability trend trade is. It's a pattern that is repeatable, that you can study, that you can back test, that you can prove, that has shown to win more than it loses. So once you get good at your chart reads, Once you can identify advantages, guys, you're going to understand where the market is likely to continue. This becomes your entry very often for almost every trade that you take. You're going to understand where the market is likely to go, and this is going to help you with profit targets as you grow your management plan. And then finally, you're going to understand where the market is likely to stop. And these are termination conditions. What an ominous name. Termination conditions. And these are the lines on a large chart that could really stop the market, make it reverse, create big untradeable bounces. And you're going to know where they are long before you ever get to them. And that's one of the advantages that Nexgen creates. So we're going to focus on these 3 rules. That's all it takes for the high probability trend trade, guys. I don't want you to overthink it. I want you to keep it this easy in the beginning. Rule number 1 says that the large chart needs strong trigger lines, and the rule's in white. If that rule is true, you have the advantage of momentum. You have a market where the odds are favorable for it to continue with the trend. This is the first advantage for a reason, because momentum on a large chart is hard to stop. Rule number 2 says termination false. That means that you're not trading into any of those likely to stop areas, which means that you're going to have room to your profit targets. We're going to call that the advantage of a clear path. Rules 1 and 2. Once they're met, when you have those first 2 advantages, this is the true foundation, guys. This is the basis for everything you're going to do. These 2 rules are going to work their way into almost any trade you take with this software. So I really want you to focus on understanding momentum, being able to identify termination conditions so that you can have a clear path. And with just these 2 rules, you have everything you need to create a very consistent, a very profitable trading plan. Rule number 3 is designed to have you enter the market where the market is most likely to continue. Rule number 3 for the high probability trend trade is specific to a trend trade. And rule number 3 is going to give you the advantage of that entry area, that point where the market is most likely to continue. So 3 rules, 3 advantages, and it's the 3 advantages that create a trade for the brand new user. And these 3 rules take place on 2 charts. So 5 things to think about, really. 2 charts. There's a large chart, and the large chart will define the direction. It'll provide the momentum through rule number 1, and it will define the areas through rule number 2. And the large chart's a very broad stroke of a brush. It's an overall opinion of the market. It's very slow moving, and it is difficult to see change on a large chart. Your small chart is your entry chart. It's a refinement chart. It takes 1 bar on the large chart. This is where all that great information comes from. And it'll turn it into 20 to 30 bars that'll show you a smaller, faster movement within that 1 big bar, giving you your advantages. And this is how we pinpoint our entries, our best of the best spot, where the market is most likely to continue. And by using this smaller chart, you can increase profit potential the way this trade is taught. Your entry is as far away from your profit targets as we can get it and still have advantages. And it's going to reduce risk and increase that profit potential. And rule number 3 happens on a small chart, but only when rules 1 and 2 are met on a large chart. And we do this because these 2 charts, large and small, are the large crowd and the small crowd. This is how I want you to think about it. Who are you trading with or against, guys? Are you trading with the powers that be, the men and women with the money and the influence to push the market in the direction that they want it to go, the men and women that create the momentum that gives us the first advantage, the men and women who react at those key areas that could stop the market? Guys, that's your large chart. And trading with the large chart tends to be the path of least resistance. Your small chart, I want you to think of it as a small crowd. And this small crowd is infinitely larger than you, and they have way more money than you and a lot more influence than you, and they fight everything that the large crowd wants to have happen, and they create what's called a retracement, a little push counter to the underlying trend. Their retracements typically fail 70 to 80% of the time. They fail to reverse the market completely 70 to 80% of the time, which means that when you pinpoint their failure spot where it's most likely to happen, and you do that with rule number 3 on that smaller, faster refinement chart, guys, you put yourself in a position to take the highest probability trend trade that has the potential to win up to 70 to 80%. So big crowd, little crowd, large chart, small chart, guys. Let the large chart lead the way and just go with the flow. Follow whatever they're giving you. We're going to go through this. This is what we do every morning, guys. We start our day learning the Fibonacci rules, the trigger line rules for when it's okay to trade. When is it okay to trade? It's okay to trade when my rules are met. Why? Because my rules have been proven to win more than they lose. My rules are nothing more than a pattern, a compilation of 3 advantages that I can go back and back test historically over the last year. And when the day is done, that back testing should show that this is a trade that typically wins 70 to 80% of the time. That's why we enter the market, because the advantages are present. You have the ability to simulate. Nexgen gives you a working copy of the software, a platform to run it on. You have an absolutely zero risk environment to learn these patterns, to learn these rules, to practice these rules. And the first step to becoming a confident trader ASAP is all the practice that you do. Drop it into this room, guys. Take a picture. So and let me see if I can pull this up real quick. When you guys download the software, it gives you TechSmith Capture. Open it up, have it ready for the day. TechSmith Capture gives you the opportunity to post a picture in the room. It looks just like this. You can capture a picture, click and drag, and you can take that picture. And you can use this call out button, left click for arrows, left click for boxes, and that call out button, this is how we talk. This is how every time you take a trade, you can drop it in the room and you can get a private session with me. Every time you drop a picture in the room, there's going to be a lesson, whether it is keep doing what you're doing. No worries, I got you. You're in Snagit, Bob? No worries. We'll go over it when we go through the spreadsheet. Cool? And just a heads up for you too. Inside of the spreadsheet, I've actually put a couple links on how to do it. And I give you guys a spreadsheet every morning, but we'll do one together, Bob, just to make sure that you're comfortable with it. Because using the spreadsheet, I love the way that segued. No, we'll do a live one. I just want you to know that if you need it later, it's there. Posting your trades in the room, guys, this is the first step. Get feedback on everything you do. Because you need to know if you're doing it right or if you're doing it wrong. So every time you post in this room, guys, we're going to look at your picture and we're going to talk about what you see, which is why annotation is so important every time you take a picture. You're going to describe those 3 rules and you're going to point them out to me and you're going to tell me what your chart read was. And the reason I do this is because if you tell me that you have strong triggers, but it turns out that they're weak, then we'll backtrack and we'll go to that lesson on momentum and make sure that you have a solid understanding. The same is true with termination conditions, even entries and exits. We'll look at everything that you're doing. We'll take your chart read, make sure that it is the most efficient, effective, accurate chart read that you could have. And if there's anything that I see that you could do better, maybe something could reduce risk, maximize profit potential, maybe you should have just been sitting on your hands, guys, we'll discuss it every time when you post in the room. And then the second piece is use the spreadsheet that we were just talking about with Bob, and we're about to do that right now. Because one of the things you have to do is you have to simplify, you have to keep it easy, you have to keep it focused. And you've got to know what looks you're going to commit to. What are the patterns? And you've got to learn them so that they become easy. And that's where the spreadsheet comes in. So there's 4 tabs on the spreadsheet. And I'm going to use that capture software real quick. Whoops, I accidentally closed it. And I'm going to show you how to drop a link into the spreadsheet. Because what you're going to do is you're going to come back every morning. I've got all the pictures, guys. You're going to come back every morning and you're going to study the pictures that you put in this first tab, because the first tab is nothing more than a trade journal. That's all it is. What did I do? What were my advantages? What was the feedback from class? And you'll be able to come back every morning and study what you did yesterday and ask yourself what worked and what didn't work, and what kept me confident and what made me nervous. And then most importantly, from that first tab, what was the feedback from class? I would have sworn I had a clear path, but when Mark looked at my chart, he said, you're trading into a termination condition. And what you're going to notice is that I say the same thing about your charts over and over, because everybody has a thing. Everybody has a rule that they tend to break. Everybody has something they do great right from the get-go. So when you see these repetitions, you're going to see the mistakes that you're making, and you're going to focus on avoiding them. And you're going to see the things that you've done great, and you're going to focus on repeating them. And I'm going to give you that feedback with everything you do. So when I open up Capture software, I'm going to go to, I'm going to open up my charts real quick. Let me pull those up. And we're going to take a picture, and I'm going to show you guys exactly what I'm looking for. So when you stomp down on that Capture button, if you hover over one screen, it's only one chart's worth of information. So I want you to left click, and I want you to drag all the way to the bottom right and show me both charts. When you release the mouse, it's going to give you this option. You can take a photo, you can take a video. Guys, the videos are awesome. Record yourself trading and talk out loud about what you see and why you're doing it. There's a lot of great information there. But if I click the Capture an Image, it gives me an image preview. And this image preview is where you're going to vandalize your charts and drop them in the room. So everything is click and drag. The arrow, if I left click, I can do a little arrow, I can do a big arrow. And I'm going to draw it first to momentum, and I'm going to talk about the momentum that I had in the trade. I may use a shape, again, click and drag. And after I've spoken about momentum, I'm going to talk about whether or not I had a clear path. I'll have the ability to show my entry, to show my exit, and I'm going to talk about why. Why did I get in here? What made me get out here? And if you give me this information every time, man, guys, we're going to get you where you want to be so much quicker. And then come down to the bottom right-hand corner and click Upload. When you click Upload, what it does is it sends that picture to the screencast cloud, and it gives you a link. If you copy this link, the first thing I want you to do, of course, each and every time, is I want you to drop it in the room, and I want you to know that I'm going to go through it, and we're going to talk about what you saw, what you did, all those good things. That's that private session. But I also want you to bring it to your spreadsheet. This is a trade you took. Win, lose, or draw, there's a lot of great information there. So I'm going to right click, and I'm going to paste that link in there. Whoops, cancel. Sorry. Habits. And it's going to drop in that screencast link, and it's like app.screencast and all these letters and words. And this is great, but I like my studying to be a little more efficient. And I'm going to create a hyperlink. So I'm going to make sure that this is still in the box here. And I'm going to go to my Insert tab. And I'm going to click on the button that says Link. Once I do that, it's going to give me two spaces to fill out. The text to display, the link will already be up there. So what you're going to do is you're going to repaste it down in address, because that's where we want this link to go. That's your screencast address, same way you go to Google or eBay. And under text to display, we'll call it using Capture or whatever. You might call it trend trade short, trend trade long, perfect trade, lost this one, whatever you want to call it. And then once you click OK, you've got the link, and once you click on the link, you'll be able to come back and study everything that you did. And that study process is a huge part of you finding success. Those pictures become a huge part of you becoming a chart reader sooner than later. Did that help a little bit, Bob? And then again, everything that I just did is right here. How to annotate, how to paste. Practice a couple times, and the cool thing is once you've created 2 or 3 hyperlinks, if you right click to go to paste in the link, what it'll do is it'll give you that default to the link button down here, so you'll be able to bypass a step, and that happens after 2 or 3 uses. Microsoft's kind of intuitive. The second page, These are the rules being met for the high probability trend trade. So in green, I have strong triggers, rule number 1. I have a clear path, rule number 2. And I have the entry, rule number 3. So what you're going to do, and the same thing, Bob, so in Snagit, sorry, I forgot you had Snagit. When I do Snagit, up here, share link, you're going to want to get it to screencast if it's not your default. It's my default. And then once you do it to screencast, it'll go through and you'll be able to share that and it'll give you a link. So it's the same thing. So it's the screencast that it goes to. That's what we're posting in the room with. But when you sign up for Snagit, when you sign up for Capture, you have a screencast account. And it's kind of cool because you can go to screencast, whoops, and you can log in. I think I've got that saved. You guys know my password now. It's *******. And there's all your pictures that you've taken. How cool is that? There's that picture that we just took. I can come back and look at this stuff and go through it, which is pretty neat. I think that's a pretty cool feature. So the more pictures you take, guys, the quicker you're going to get to where you want to be. Each of these pictures in the spreadsheet are exactly what it looks like to have your rules met. Every picture is annotated, arrows drawn, great study tool. And then the red sections, or the salmon sections, guys, these are what it looks like when your rules aren't met, when the advantages aren't there, when you shouldn't be taking a trade. So now you're going to know the difference between the two. The third tab is the client trades. Andy, that's everybody's, right? The client trade section is where I've stolen pictures from you guys. I've put in tons of pictures from my own chart reading. There's the high probability trend trade, long and short, the entry sequence from beginning to end and how to identify your entries. There's a management. Both of these will be on the KISS plan that I gave you, the very simple plan designed to optimize your chances of success. There's almost 400 pictures of Nexgen users who have posted in the room, showed me beautiful, beautiful trades. And they were so nice that I stole them to help create a study guide for you guys. There's a lot of people that want to trade the NASDAQ. I teach on crude oil, I teach on the S&P because the NASDAQ is crazy. The NASDAQ is about 10 times faster, and you have to be very confident with your rules and what you're looking for to trade a market that fast. So this is for some of you, not for all of you yet. There's management, very mechanical in the beginning, a lot of reasons to hold for bigger moves or exit a little earlier. You will create a plan based on your ability reading the indicators. And then patterns that repeat themselves, just things that you're going to see once you can read your indicators. I've given you a lot of my favorites right here, and what you're going to do is you're going to use the final tab and you're going to make it look like the one that I've put together. You're going to start taking pictures of the patterns that will get you into the market. You're going to start to take pictures of ways you can manage your trades more effectively, and you're going to start taking pictures of the things that you see. And I'm going to tell you right now, the people that take the most pictures, that annotate the most charts, that fill their spreadsheet and study it, these are the people that are reaching their goals sooner. It's happened almost every day for as long as I've been teaching this classroom, guys. You will get out of this software the work that you put into it. So don't be afraid to really go after it and really flood my room with your great pictures. So we're gonna get going. We're gonna head off to the rules, guys. But before we do that, we are going to talk about what you're looking at on your charts. Because I know there's people that are coming in, they're like, Mark, what the hell's a trigger line? Every chart that you have in your workspace, guys, is going to have triggers, small and large. Small triggers, they're a fast moving average. That's as deep as I get into them. And they're the same no matter what time frame. Small triggers will always be two solid lines that are a fast moving average on whatever time frame you're looking at. Large triggers are dashed. They're a slow moving average, and they look exactly the same no matter what time frame you're looking at. So there's small triggers and there's large triggers. Initially, we're going to use them to define momentum in the market. Rule number 1 is 100% dependent on using your trigger lines to define that momentum, and we're going to go over how to do that. But you're also going to use them with areas to be able to find termination conditions, to be able to get your entries. So the areas, again, the names don't change depending on the chart, guys. There's going to be divergence high lines and divergence low lines. Cyan, magenta, they print from a pivot when there's a loss of momentum. I want you from day one to associate momentum with a loss of momentum. Or I'm sorry, divergence with a loss of momentum. If the market is screaming to the downside and you see this cyan line print, then you know that momentum is lagging. It's not following price. The same to the upside. You're going to use red Fibonacci resistance and blue Fibonacci support, yellow 1-to-1s, and also mid bands. And these will all come into play on both the large chart and the small chart, but they have a different use on each. So we're going to start with the small chart, or I'm sorry, the large chart. Large chart leads the way, large crowd leads the way. Let's follow the lead of the people that control the market, guys. And rule number 1 says that my large chart, the 13-2, needs strong trigger lines. Strong trigger lines are going to give you that advantage of momentum. And you have to understand trend first because it's going to help you with strong triggers. If I look at the large chart, the color of the background behind the most current bar, the bar that's printing, if it's green, the market is in an uptrend, and I'm only looking for rules to be met for high probability trend trades long. If it is red, the market's in a downtrend. I'm only looking for rules to be met for high probability trend trades short. Just because it's green doesn't mean I should be going up. It means that I'm looking for rules to be met. And long is the only position that I take. Just because it's red, it doesn't mean enter the market short. It means look for your rules to be met to take a short trade. So trend is your friend. They've been saying that for decades. In order to have strong triggers in an uptrend, the background is green, your small triggers are green, and your large triggers are green. And if you insist that the colors match, it's going to keep you out of a lot of trouble. In order to have that strength, those strong trigger lines, your small triggers are up and above the large triggers. The large triggers are widening, they're angled in the direction of the trend, and it's the space that's created between the two. It's that gap between small and large triggers. It lets me know that the odds are favorable for the market to continue up. When my small triggers are red, my large triggers are red, everything is down and there is space between the two. This is strong trigger lines, and when I have strong trigger lines in a downtrend, the odds are favorable for the market to continue down. So odds favorable momentum. I'm a very big fan of language, guys. Odds favorable momentum can push a market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum can even cover up some of the mistakes that we all tend to make as brand new users. Bob, we'll go over strong tops or bottoms when we get to terminations. Great question. Let's get through momentum first, and then we'll go to the strong tops or bottoms, and I'll add a little extra this morning to make sure that the understanding is there. Guys, the opposite of strong is weak. How easy is that? Weakness comes from the small triggers returning to the large triggers, working inside of the large triggers. I like to think about scissors, and when scissors are open, I can do some business, guys. Strength is open scissors. When those scissors close, when I have that weakness, anything can happen up or down. So I want you guys to associate a look with some words. Strong triggers they're strong. There's momentum. The odds are favorable. Weak triggers, weakness. Anything can happen. So there's two options. Only one of them is the advantage that you need to look for rule number 2. And when you have those strong triggers from the point of separation until they return, this is where we're looking for those high probability trend trade entries. So very often on that big slow chart, price is going to work its way below the midpoint and it's going to create what looks like a tail or a wick. All of these tails or wicks, these are possible trade entries, possible long trades. You're going to use this little circle as a study tool to go back and test this methodology. The same is true in a downtrend. When the separation is there, when the push is strong, when the odds are favorable, you're going to look to sell Fibonacci resistance on that smaller, faster chart. On the large chart, it just looks like a tail or a wick. You will literally be able to pinpoint where that tail or wick is most likely to form and this becomes your entry for the highest probability trend trade. And once I have momentum, and I guess before we do that, let's just ask the question. Guys, how do we feel about momentum? This is crude oil. My first bar. My smalls are green, my large are green, there's space between. Ladies and gentlemen, can you give me a Y if you see that this is odds favorable momentum, that this is a market likely to continue in the direction of the trend? That's how easy momentum is. It's one look, first bar. Guys, commit to it. Let's open this up. Boom, boom, boom. There's your whole range. From weak triggers down, reversal. Strong triggers, breaks areas, keeps pushing, right? Strong down. And then we're going to talk about these darn lines that even with momentum seem to stop the market, guys. Those are termination conditions. You know about them before you get to them. Termination's false. Room to profit targets. Guys, we want a clear path. We want to take a market where the odds are favorable for it to continue in the direction of the trend, and we don't want it trading into anything that could create a big untradeable bounce or reverse the market. So we're going to avoid termination conditions. Termination conditions are Fibonacci-based indicators that may reverse the market. I'm very careful to use the word may, might, could, has potential, because we never know what's going to happen. But what I'm going to give you is a recipe to recognize when your advantage is gone. So those areas are the same ones that we talked about. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, divergence highs, divergence lows. So Bob, when we start talking strong tops or bottoms, remember any of these lines, not just fibs, can be a termination condition. Any of these areas, divergence highs, divergence lows, yellow 1-to-1s, Fibonacci resistance, Fibonacci support, they can all behave as termination conditions. And these are the places where the large crowd is reacting, where buyers are buying and sellers are selling, where fights happen. And guys, these lines can stop the market. So what we could do, Bob, and let's do this. Let's take a picture. To identify a termination condition, there's a couple things that can happen. So first, we're going to let the large crowd get there. Let me find cyan. So it could be, oops, let me get magenta, I think. So it could be red Fibonacci resistance. It could be a magenta 1-to-1, or it could also be yellow 1-to-1s. It could be any of those areas, guys. These are the areas where the large crowd is most likely to react, where they're most likely to make decisions. So rule number one, or step number one for identifying a termination condition, is let price reach the area. Let your dynamic Renko bars work their way all the way up to resistance, all the way up to yellow 1-to-1s, all the way up to a divergence high. It can be any of those. And once price reaches resistance, the decision-making process is in gear for the large crowd. And they could break, it could roll, it could reverse, they could fight. You never know what it's going to be. But if price reaches resistance and your triggers remain below, large and small, both remain below the area of resistance, this is an area that may create that untradeable bounce, that reversal, that fight between the buyers and sellers. So rule number two isn't met. That is a termination condition. No trades into the area. That's the simple way to say it. If price reaches an area, my triggers remain below resistance, no long trades into the area. Wait for the reaction. Price hits Fibonacci support. Triggers remain above. Price reaches the area where my triggers, they remain above. This area may create a fight, may create a reversal. It could break. I never know what the reaction is going to be. But when price reaches the area and the triggers remain above, rule number two says don't trade into the area because it may reverse the market. Are you guys with me so far? Guys, this is something that you're going to see every day. Price reaches, let's come back here. Price reaches Fibonacci resistance. Even with odds favorable momentum, look at the giant retracement right off that key area. You knew about that key area the whole way up. Weak triggers, triggers don't break. And it came from resistance to get there. Guys, we know about these areas. Right back to support, right back to fibs and yellow 1-to-1s. and then it pushes down, right to support, weakness, there's your reversal. So if price reaches, let's just wait for the reaction. And here's a cool thing, and Bob, here's your answer. For strong tops and bottoms, guys, we define a strong top and bottom if price reaches Fibonacci resistance and all the triggers remain below. None of my trigger lines break through that area. That's a very key part. And that key area reverses the market, takes your large triggers, and they roll from green to red. That's the recipe for a strong top or bottom. First, it's a termination condition. Then it becomes a strong top with a reversal. First, it's a termination condition. Support, divergence low, yellow 1-to-1s. If it reverses the market, if the large triggers roll from red to green, then it becomes a strong bottom. And those picks, small triggers broke fib. Right here? Or right here? Oh, when we were looking at the live market. Okay, so let's go do strong tops and bottoms real quick. What do you say? That's the wrong chart. Hold on. Bum, bum, bum. You're going to love this lesson. Actually, let me do one more and then we're going to come back to this picture, okay? Because all we're doing right now, Bob, is we're talking about when it reverses. They also break. And we're going to need this for strong tops and bottoms. So number one says price reaches resistance, all the triggers remain below. This is a termination condition. Rule number two is not met. Absolutely no trades into that line. Wait and see what the reaction is. Will you guys give me a Y in the room? If you're comfortable with that, when price reaches an area of resistance, the triggers remain below, it's okay to do nothing. When your small triggers get through the area, everybody sees how both lines of the small triggers have smashed above resistance, but my large triggers remain below. As long as I have odds favorable momentum, this area has the potential to break, but it's only potential. It's only potential. They're pushing through, but they haven't pushed all the way through. There's a lot of opportunity in this look, but because it's not broken yet, you're going to have to manage a little more assertively. Bob, this look takes strong top and bottoms out of the equation instantly. The triggers must remain below. Once it has the potential to break, it can no longer be a strong top or bottom. Once the small triggers and the large triggers get north of resistance, guys, then resistance is broken. Then your path is clear. Resistance behaves as support, and your path remains clear until you reach the next line. And when you reach the next line, the whole process starts over. So first, it's a termination. Absolutely no triggers through. This is the only look that can give me a strong bottom. Once it has the potential to break, there may be opportunities, but it does require odds favorable momentum. And then once the smalls and large get below support, support's broken. The path is clear. It behaves as resistance. And my path remains clear until I reach the next area. So let's go back to that large chart and let's do a couple examples. And I'll give you guys this in the room when we're done. So I'm going to start right here. And I'm going to use the annotation. Price reaches resistance, triggers below, no long trades. Does that make sense, everybody? Price reaches resistance, triggers remain below, no long trades. That's it. That's a termination. So Bob, right here. And it's only for, no. Okay, so that is exactly the question that I needed. So let's do this. Triggers are two lines working together. In order for triggers to break, both lines of the triggers must exceed the area. That's exactly what we needed, Bob. I needed you to say that so that we could make this great lesson. So when I say triggers don't break, even though one little line got through, both lines of my small triggers didn't break through. Do you see how both lines of the smalls got through there? Can't be a strong bottom. Both lines of the smalls got through there. Can't be a strong top. Both lines of the small and large break through. Can't be a strong bottom. So that's going to be your recipe. It is not just one line, but literally both lines have to get through. So when you go back and look at termination conditions, price reach resistance, none get through. That's a termination. When those large triggers go from green to red, now it's a strong top. Happened about 4 bars after the termination condition. Small triggers got through the divergence line, so even though it reversed, this isn't a strong bottom. Smalls, both lines of each got above the divergence high. Even though it reversed, not a strong top. But look at this. Both lines of the small don't get through support. Once it reverses, 1, 2, 3, 4, 5, 6, 7, 8 bars later, now it's a strong bottom, right up until it hits that termination that the triggers didn't get through. 7 bars later, 4 bars later, it's a strong top. Does that make sense, Bob? So a strong top or bottom is awesome. No, because on crude oil, so in order for Nexgen to be, just to make my brother's job easier, honestly, he's added small swing 1-to-1s to every chart because he knows that he has users that use those small swing 1-to-1s. On crude oil, they're pretty irrelevant. There's not enough size for a small swing 1-to-1 to be significant. If you're a NASDAQ trader, very much so, because the charts are huge. So I just took them off. But we're just letting price reach an area. Once price reaches the area, we're done with price. The trigger lines tell the story. Does that help a little bit on strong tops or bottoms? So first it reaches, awesome. And it might take 4, 5, 6, 7, 8 bars before it becomes a strong top or bottom. And then Bob, one thing that I have, let me share it in the room too. This is a little something that I wrote. It's called Strong Tops and Bottoms for New Users. And it actually goes through and it does the exact same thing. First it's a termination, then it's a strong top or bottom. So let me drop this picture in the room as well just to go along with it. Awesome. Bob, are those trades or are those questions about terminations? Because if they're questions about terminations, let's check them out. If they're trades, let's look to them. Okay, questions I answered. Perfect. That's my job. So, not broken, no trades. Potential to break. You can trade, but manage assertively. Totally broken, and now we're good. So let me look and make sure. And guys, this is what, if you drop a picture during a lesson, make sure that you do this. So rule number 1, we first look for a strong top or bottom. So it's not rule number 1, Bob. And let me show you what I mean. There's 3 rules for a high probability trend trade. There's momentum, there's clear path, and there's entry. Does that make sense? These are the 3 rules. This is what it takes to get me in. If it is coming from a strong top or bottom, it gives me warm fuzzies, Bob. If it's coming from a strong top or bottom, I feel even better about the trade. But it's not a rule. There's only 3. Strong top or bottom is also the rule for the HVA trade, for the momentum trade, for the white bar trade. But it's not a rule. So let's read it. Look for the strong top or bottom. Know where the market's coming from. That's key. Trigger lines broke through the blue fib. They sure did. So the cyan blue line formed the strong bottom. It does not. So this divergence line, Bob, is nothing more than a loss of momentum. In the videos, this is defined as a good bottom. Why? Because it was a reversal. It was at a fib, but the small triggers pushed through. And that divergence, that loss of momentum at a key area, it says, hey, Bob, guess what? The sellers were pushing. They had the best momentum ever. And those darn buyers stole their momentum. So it's a good bottom, but I don't talk about good, great, awesome, exceptional for new users. For brand new users, let it either be an absolutely no triggers through as the definition of a strong top or bottom. And what it does is it removes a lot of the gray. It removes a lot of the question. It removes a lot of the, well, 2 triggers came through, but a divergence, and there were 3 divergences on my small chart. I'm going to call it a strong top or bottom. That's a lot to think about for the new user. And these videos and these pictures, these are all a little bit beyond the very basics. So I love the questions. So I'm going to go back to termination conditions. I'm going to do it in the user guide. And I want you to see how those divergences come into play. So I'm going to go to the trading guide and I'm going to go to termination conditions. And I'm going to give a little lesson here, and I hope this is helpful. So if price comes down and goes up right around the middle of the 3rd bar, you may get this cyan line. So Bob, price never reaches the divergence low. Price actually creates this divergence low. So because the recipe for a termination condition says that price must reach that area, this divergence low on its own is not a termination. Does that make sense, everybody? This is nothing more. Let me type it out. This is nothing more than a pivot with a loss of momentum. So that's the first lesson in those divergence lows. But then we go to termination conditions. If price comes back and reaches that divergence low and the triggers stay above, now that divergence low is a termination condition. It may reverse the market. In this particular look, off of these divergence lows or highs, is what we call a pivot stop out. And what does that mean? Here's your pivot. The sellers were in control. The buyers stole their momentum. The buyers put a line in the sand where they dare the sellers to come back. The sellers did come back. And they made it a little bit below. And then there's that reversal. No triggers through. And this is what we call a pivot stop out. This is a termination. And then once it reverses the market, now it's a strong bottom. So when we go back to your picture, Bob, that you posted from the video, since the triggers got through, this area, it never broke. It didn't even have the momentum to make you believe that it was going to break. So not only is momentum waning right at a key area, the buyers also stole the momentum right at a key area. So the description is that this is a good bottom. Does that make sense? And guys, this is why I keep it very simple in the beginning, because that's a lot to think about. That's putting a lot of pieces together. And it's so much easier to say no triggers break, let it reverse for the brand new user. As you grow with the software, you will grow. But guys, all of that to be said, a strong top or bottom is never mentioned in the rules for the high probability trend trade. It will be for some other trades that Nexgen teaches, but right now we're focused on the best of the best. Bob, did that help, or did I just confuse the hell out of you? And areas can break. And areas can break. I think I killed Bob. And here's one of those looks, guys. There's going to be times when you have fib after fib after fib. One-to-ones, fibs, divergence. You're okay? And there will be times when you just can't seem to get a clear path. And guys, this is okay. This is 90% of your day. And it is okay to do nothing. It really is. And the futures market trades billions every day. It's not necessary to be in every move. You don't have to be the first one in. You don't have to be the last one out. Find your opportunities in between key areas with momentum pushing the market. Guys, this is how you get to where you want to be. So we're going to go back to the rules. The advantage of momentum, strong triggers. Strong triggers has nothing to do with areas. Strong triggers has nothing to do with entries. Strong triggers has nothing to do with fibs, with mid bands. The only thing strong triggers is a separation between the small and large in the direction of the trend. Does that make sense? How's that I mean, that's simple, right? This is your look. This is always your look. Commit to this look. And then rule number 2 is make sure that you have a clear path. And a clear path is always the idea that your triggers are all beyond the area. And this will always be a clear path, and this will always be your look brand new users. So you don't have to worry about strong tops or bottoms. You don't have to worry about 2 triggers through showing you the potential. You don't have to trade when none of the triggers are through. This is always rule number 2 met. So in the beginning, it's simple, it's basic. Let's just focus on the easy stuff, and then we'll add the more difficult things. So if I have momentum on the large chart, if I have a clear path on the large chart, well then it's time to go look for entries. Now it's time to go look for areas inside of favorable large triggers. And that's exactly what we're going to do. But if I turn my attention to a smaller, faster chart, and I'm looking for my entry, there will be one time when the small chart will keep me from taking that trade. There is one time when the small chart will override momentum and clear path on the large chart, and that is 3 divergences in the same price range, 3 losses of momentum in the same price range. It may terminate the trend, guys. This is your small chart showing you the change that you can't see on the large chart. This is your small chart putting up a signal flare and saying, hey, the buyers have stolen momentum in a smaller time frame 3 times in the same darn price. There's a fight. No more short trades. 1 divergence, I'll take a pullback to an area inside of favorable large triggers all day long because I have odds favorable momentum on a large chart. Hell, 2 divergences doesn't scare me. But 3 divergences will keep me from taking the trade. 3 divergences will also have me exiting a trade because it's a termination condition. So if that's present, guys, don't find your entry. But if it's not, this is where the precision comes in. This is where we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Guys, that's the language. That's the easy language. Buy or sell a pullback. What's a pullback, Mark? A pullback is that fight by the small crowd. It's that little push that goes against odds favorable momentum, that goes against a clear path. That little push down. We're going to buy or sell a pullback, and we're going to do it at an area. We're going to wait at an area with a limit order. We're going to wait at fibs, mid bands, or yellow 1-to-1s. And we want that area to be inside of triggers, guys, because triggers are going to define where that pullback is most likely to return. Areas are going to define where it's most likely to bounce. So on your entry chart, price may return to the large triggers. On the 5-1 chart, those smooth triggers on your 5-1 that you're going to compare to the small to define momentum, your retracement may return to those 5-1 large triggers. But on the large chart, price may return to the 13-2 large triggers. So you have on your entry chart the 5-1 large triggers, they're smooth, and the 13-2 large triggers. They have steps. They're called synthetic triggers. All these do is define where the retracement is most likely to occur. So every time you go to look for an entry, you're going to say to yourself, price may go here, it may go here. So there's a look that reduces the size of that range, and it's called favorable large triggers. Good morning, Wayne. And when your large triggers and your synthetic triggers are overlapping, like 2 snakes riding piggyback, That's the best of the best, guys. This is the absolutely smallest range where the retracement is most likely to go. When you put an area inside, you have the least amount of space where it's likely to bounce. So the language is you're going to buy or sell a pullback at an area inside of favorable large triggers. That's the best of the best, new users. So when the large chart says go, you're going to turn your attention to a small chart. You're going to go to that smaller, faster chart. And you're going to define your entry. So when you go to that smaller chart, everything is going to be going up. It has to, because it's following the large chart. You're going to have all the momentum in the world. Everything's going up. And as crazy as it sounds, we're going to wait for the small crowd to fight. We're going to wait for a reversal bar to let us know that that pullback is starting. So once I get a reversal bar, the fight is on. The retracement has begun. I need to figure out where that retracement is most likely to go. Your trigger lines create that roadmap. Your retracement, the down bars, are probably going to go anywhere from the top of the triggers to the bottom of the triggers. Somewhere in there is where that pushback is most likely to happen based on patterns that have been studied for 30 years. And you're going to say to yourself, all right, I got the reversal bar, but that's not my entry. My entry comes from areas inside of favorable large triggers. I see my triggers. That's not my entry. That's just where the market may go. I need areas. I need areas to create a bounce. So when I identify my trigger lines, I understand where the market may return, but I need that area. And areas can be fibs, mid bands, or yellow 1-to-1s. And the key is that they're inside of triggers, that they're inside of that retracement zone. And the tighter the triggers, the smaller the zone becomes. So this box from the highest area, it happens to be a fib, to the lowest area happens to be a midband. This box represents where the small crowd is most likely to fail. This box represents where the trend is most likely to bounce and continue with the large chart. So what we're doing is we're identifying where the market is most likely to continue, and we're developing trust to the point to where you can activate a limit order a couple ticks above that highest point of support. And you can say to yourself, all right, I have momentum, I have path, I have entry. All I need is the small crowd to push down. And if they do, each and every one of those advantages is with you as you enter the market in a long position, hoping, because you never know, hoping that the large crowd's momentum, that the large crowd's clear path is going to carry you to the next key area right from the area inside of favorable large triggers. So all we're doing is we're defining entries for a minute, guys. So reversal bar begins the pullback when the rules are met. We define where the retracement is most likely to go based on the trigger lines. And then we define where it's most likely to bounce based on the areas inside. And guys, it creates a window sometimes. You may have 2, 3, 4, 5, 6, 7 areas in there. And the reality is none of them are more important than the other, but we're eyeballing the one up top because the large chart has the strongest look of momentum that you could ever hope for. And the large chart has the clearest path you could ever want. We're not expecting the small crowd to get a lot of work done. So 2 ticks above that area is right where your limit order goes. If they get there, great. If they don't, it's not your trade. But by defining where the market is most likely to continue, areas inside of triggers, use the language, you know that any line outside of those triggers, below those triggers, on the wrong side of those triggers, is not a part of the window. It's not a part of the entry equation. This is actually where your advantage is gone, where rule number 3 advantage has gone out the window. You don't want to be in a trade down there. Large chart says down, large chart says momentum, large chart says clear path. You guys wait for the fight, the reversal bar. The reversal bar signals the beginning of the pullback. Trigger lines define where that pullback is most likely to occur. Areas inside of triggers define where it's most likely to bounce. Once again, your order goes 2 ticks below the lowest point of resistance inside of triggers because we don't expect the small crowd to get that much work done. Any line above the triggers, any line on the wrong side of the triggers is where rule number 3 advantage is no longer a part of the equation. This is precisely where I don't want to be in the market, no matter how many areas I have up here. So by defining where the market is most likely to continue, you also understand where the market should not go. This is your initial stop, guys. This is the beginning of management. Your initial stop will be 4 or 5 ticks above all the trigger lines for a short, 4 or 5 ticks below all the trigger lines for a long. And if the small crowd can push through the triggers, if the small crowd can push through the areas inside of triggers, this isn't a trade you want to be in anymore. Your advantage is gone. And everything we do is based on advantages. And it will get hit 20 to 30% of the time in the high probability trend trade. It's a cost of doing business. But more often than not, you'll get confirmation that the market's doing everything you hoped it would do. That's a reversal bar in the direction of your trade. And you can reduce your risk. Where the market should not go is now redefined. And you can reduce your risk 2 ticks below, 2 ticks above. And it doesn't mean that your stop won't get hit, but it means that you take a much smaller loss if it does. So, guys, that's the entries. You'll notice that the rules don't mention a strong top or bottom. That the rules don't mention a strong top or bottom. The rules identify momentum, your path, and your entry. So you've got to study based on that premise, guys. If I have strong trigger lines, if I have a broken area or the potential to break, I may see one of those wicks if I go back historically, one of those tails. We don't trade the tails. This is a large chart endeavor. This thing never changes. That never changes during this pullback. And guys, this is your entry. And what you'll find is that the bottom of this tail, the bottom of this wick, typically lines up with an area inside of that retracement zone. This is your pattern. This is what you're studying, guys. This is the high probability trend trade. So you're going to use that idea to go back and study so many pictures. I mean, all the pictures. Let's look at the current market. And this is probably a good example. It starts with odds favorable momentum. This one happens to have the potential to break, but it's not broken yet. So I want you guys to give me a Y, please, if you see it. This is the same thing. This one has the potential to break, but it's not quite broken. Do you guys see it? Odds favorable, triggers first. Smalls are through, large are not. This is only the potential. Let's see what those circles look like on a smaller, faster chart. This one, ooh man, maybe 4 ticks above a mid-band. You might not have gotten an entry there. But do you see the pattern? The reversal bar, the bottom of the move right above support inside of triggers, it circles the tail. A lot of us wouldn't have gotten filled on that one. Some of you might have. Scroll back. There it is again. Where's my circle? Uh-oh, I think I'm about to crash my charts. Oh, too much dragging. It's about to die, guys. I'm going to have to bring it back up. Son of a gun. There it goes. Let me pull that back up. But this is how you're going to study it historically, guys. This is how you're going to be able to go back and not even have to take a trade to learn how to recognize this trade. You're not even going to have to enter the market to learn how to enter this market. You can go back and do this historically and give yourself the advantage of absolutely zero risk. But you've got to understand some key concepts to make that happen. So I'm going to let that load up. And I'm going to start giving you guys all the fun stuff. Chart Reading 101. This is a drill that I'm going to give you. This is a study tool for you. In order to get to where you want to be, you have to be able to recognize some looks and patterns quickly. This will reinforce the lesson, speed up the process of becoming a chart reader, guys. This Chart Reading 101 is to be used with the second tab, the basic rules. So what you're going to do is you're going to go back and you're going to take pictures of strong triggers, and you're going to take pictures of weak triggers, and you're going to take pictures of clear paths, terminations, even your entry areas. But the task isn't just to take the picture, guys, and I can't stress this enough. The task is to first identify strength and then write what it means to you to have all that strength. Why is that a strong trigger? Because all triggers are green. The smalls are above the large. Momentum, rule 1, giddy yap. It's a great annotation, right? Look at this. You can do the same for termination. Price reached support. Triggers remained above. This is a termination, no clear path, rule number 2 not met. And again, in just one picture, Price reach resistance, triggers remain below, no clear path. Rule number 2 not met. It's also the weak triggers. So guys, if you go through the process of taking these pictures, of annotating this charts, you will never confuse strong triggers for weak triggers. You'll never confuse a clear path for a termination condition. It doesn't mean that you won't trade without strength or not trade with a clear path, but it means that you're going to do it knowingly. At least you'll know what you're up against and you can manage a little more assertively. Eventually, you'll piece the three together to create a trade. So while you're doing these pictures, while you're taking these pictures and learning these looks, this is where the high probability trend trade checklist comes in. And Bob, this is where the confusion happens on whether or not a strong top or bottom is rule number 1. So in the high probability trend trade checklist, the first thing that checklist asks is the market coming from a strong top or bottom? And then there's your note. Can take a trade without, but you may have to manage tightly if those divergences show up. So it can be taken without a strong top or bottom. There's your strong top or bottom. Small triggers, large triggers remain above the termination. Doesn't have to be a fib, can be any area of support. If it reverses the market, and in this case it was like 12 bars later, that sets you up for the best of the best, the highest probability trend trade that you can ever take. It's dependent on momentum. There's your rule number 1. It's dependent on the clear path. Rule number 2. And these pictures remind you that no triggers through, the area is not broken. Small triggers through, only potential, but that's your clear path. It defines your entry. So when I give you the high probability trend trade checklist, the second page is what you can print out and put on your chart. Is the market coming from a strong top or bottom? It's not mandatory, but there's those warm fuzzies I talked about, guys. When a key area reverses the market, that's when the market has a better chance to crank out in the other direction. So it's on there. Start looking for them because it's going to pay dividends on the next trades. But these are the ones that have to be yes. Do I have odds favorable momentum? Did I have a clear path? And look at the language. Did I have an area inside of favorable large triggers? So remember that my first hour is designed for new users, the best of the best. And the best of the best is all 4. The almost best of the best is all 3. Never had anybody mark yes to all 4 and do worse than 70%. So I'm going to give you guys that one as well. And I want to go back because I should be loaded up now. And I want to go back and look at that second circle because, guys, this is how we're going to study. So there's my circle on momentum and the potential to break. And then we're going to go back and find the circle. Let me click with the bar and not the drag. Right back to support, right inside a favorable large trigger. So this is the picture that you guys need to take. I didn't need to take a trade. All I needed to do was take a picture. So I capture it, I do this, and this is how I want you to present in the room in this second hour, guys. Draw your arrow, use the call out, and make sure that you tell me what you see with momentum. If you say strong triggers yes, we're going to high five. If you say strong triggers no because of the blue line, we're going to have a lesson on trigger lines. And then I want you to point it out. And I want you to say something like not a clear path, only potential to break. Not high probability trend trade. And now I know that you know what you're up against. I know that you feel like you have to manage. And then look at this. Put it right around there. And I want you to say, and guys, this is the most important language I think that you can use when looking for entries. Pull back to an area, and then here's the one. Go all caps, inside of triggers. Strong triggers, potential to break, pull back to an area inside of triggers. And guys, this was a pretty easy winner. And you're going to see that some people in this room took this trade. Click your upload button, steal that link, And guys, drop it in the room and say, hey, Mark, did I read this right? Hey, Mark, did I take the right trade? Or hey, Mark, am I studying this the way I need to study it? And I'm going to say that's the best of the best, my friend. Why don't you take a link and why don't you drop it in? And why don't you say, awesome 50-50 needed to be managed, right? And now you're starting to build your plan. You're building your plan on pictures. You're building your plan on feedback. You're building your plan on patterns that repeat themselves more often than they don't, giving you the highest chance of success. Does that make sense, everybody? That's all we've talked about today, and I wanted to go back and do that. And now I want to go to the plan. I had a gentleman tell me, long-time Nexgen user, it's not opening. Let me close everything, and now we'll, oh, because I'm clicking the wrong one. I'm going to give you guys a plan now. So this plan is a stepping stone in your learning journey. This plan is not designed to be the only thing you ever do with the software. Everything that I've talked about this morning is the absolute best of the best way for new users to get comfortable with the software. The entry that I've talked about is the absolute best of the best way to take that high probability trend trade, giving you the highest chance of success, creating the most confidence, and giving you the best opportunity to be consistent and profitable as you learn to read your indicators. So the high probability trend trade, the KISS plan, guys, it's designed to optimize your chances of success. And then through simulation study, class feedback, and continuous practice, you will craft a plan tailored to your personal goals based on your experience reading the indicators. That's an AI-generated way of saying, guys, when you can read your indicators, you're going to begin to see all the opportunities that this software provides. You're going to be able to see all the opportunities for entries, for exits. But in the beginning, let's just learn to read our indicators. Let's become chart readers so that we can see those opportunities clearly and know whether or not we're getting into the best of the best or something that needs to be managed. So your simple plan for consistency. Don't fight the large chart. Easiest way to say it. Don't fight the trend. Don't fight the momentum. Don't trade into areas. Guys, the recipe for financial suicide is fighting the large chart. Go with the flow. The large chart is your favorite lazy river, and going with it creates a wonderful day. Define your entry. Make it be your entry. It's got to be your entry. It can't be, this is Mark's plan, I'm going to try to trade it. I want you to own it from day one. So if you're using the KISS plan, Bob, this is Bob's plan. This is Bob B's plan. This is Nanda's plan. This is Big Dog's plan. Even if you think you're a big dog, you don't have Big Dog's name in your avatar. So this is it, guys. This is your entry. Own it. Insist on it being the best entry. This is your money and your investment. And mark yes to at least the last three. And this one makes it even better. But again, it tells you it's not mandatory for that strong top or bottom. And I even put pictures of what it means to have it in here, guys. So I even more cheats for you here. And then once you enter, now you have to manage. Your management plan, your entry plan, it's all based on trading 2 contracts as a brand new user. And these 2 contracts are done for a reason. Because one, this KISS plan is designed to get you paid. And it's designed to get you paid quickly. So that first contract comes off fast. It's designed to teach you where to put your stops, to use the language where the market should not go when you move those stops, rather than moving them where your fear tells you to move it. And it's also designed to build trust. And 2 contracts lets you build trust, because once you get paid, it's easier to hold for the second move. But your management plan, I say it's dependent on your entry at the area inside of favorable large triggers. But there's an old adage that says that mature traders manage losses before they ever manage profits. And I'm going to be honest with you guys. You're managing your losses by having momentum. And you're managing your losses with a clear path. And you're managing your losses at the area inside of favorable large triggers. And then finally, your first stop placement is where the market should not go. Nexgen provides an ATM strategy with predetermined stops and targets. Your predetermined stop for the S&P and crude oil is 12 ticks, guys. But 12 ticks isn't where the market shouldn't go. 12 ticks gives you reaction time to put your initial stop 4 to 5 ticks below the trigger lines. And if they push through the area inside of triggers, if they push beyond the retracement zone, you're going to exit that trade right at the stop. And you're going to take a loss, guys. And it's not a huge loss. And it's a very acceptable loss. It's a loss on a pattern that's been proven to win more than it loses. It's just a part of doing business. But more often than not, you're going to get that reversal bar in the direction of your trade, that confirmation bar. And once it prints in the direction of the trade, you can move your stop 2 ticks below that reversal bar. So we're still not guaranteeing a win, but we're guaranteeing a much smaller loss because we've redefined where the market should not go. Once you get the reversal bar, and it's very if-then, and I like that about it. If I enter where the market is most likely to continue, then my stop goes 5 ticks below the triggers. Nothing else to do. But if I get a reversal bar in the direction of the trade, then my stop goes 2 ticks below the reversal bar. Nothing else to do. My next option is if it hits my first target and I don't get stopped out, then I just put $100 in the bank. This plan is designed to get you paid, guys, because getting paid feels good and it builds confidence. If I hit my first stop, $100, 8 ticks in the S&P, not even 2 bars away, 10 ticks in crude oil, sometimes that reversal bar is the first target. I'm going to go break even. I'm going to eliminate 100% of the risk on this trade, and I have $100 in my bank account or in my trading account from the trade. One contract comes off. And guys, this break-even stop, this is where the trust comes in. This is where you have to remember that the only reason you entered this trade is because of that odds favorable momentum. The only reason you took a long trade is because that momentum had nothing in the way to create a bounce. That break-even stop may not be the greatest stop ever. You will create a trading plan and a management plan based on your ability reading the indicators. But this is the one that creates trust. And you're either going to get stopped out with a $100 winner if it gets hit at break even, or it's going to go to your second target. And your second target is $200 away from your great entry, which means that one trade, very mechanical if-then management, very emotionless management eventually. This is a $300 trade, guys. This is the highest probability trend trade. And $300 is going into your account. And $300 every day, this is my favorite part of the morning lesson. $300 every day is a $75,000 year. Throw in a break-even trade. Now it's a 6-figure year. Develop a little confidence with the software, and it goes up exponentially. At some point, can I explain this pick? Absolutely. Let's do it right now since we're talking about management. Thank you. Bob, you get the gold star today because you're giving all the great lessons, and I appreciate it. So let me take a big honking picture here. So the lot is contracts to be traded. So a 1 lot or a 2 lot, that is 1 contract, 2 contract. Does that make sense? Ooh, let me put lot there because I'm going to give you guys this picture. So stop is where the initial protective stop will appear on your chart when you enter. It will need to be moved to the point where the market should not go, and that's different. 12 ticks, 24 ticks, it gives reaction time. And again, let me do this. 12, ES, crude, gold, RTY, all of the slower moving markets. 24 is reserved for the NASDAQ because that is such a big chart with such a temperamental market. It takes a bigger stop to be able to put it where the market shouldn't go. Targets are the predetermined number of ticks, which is the smallest movement the market makes for each contract. They can be moved and should be in a lot of cases. So when you're looking at this, you've got the number of contracts to be traded, you've got where the initial stop will be placed, and then you have where the predetermined targets are. And all of this is in that drop down under ATM strategy. These MIT, this is where you realize how ignorant I am. MIT is market if touched. I've never used one in my life, and I'm not going to lie to you, I'm not comfortable on explaining it to you because I've never needed it, because everything that I do is a limit order when I get in. So this is what everything means in the ATM strategy. And then let me minimize, and I heard my stuff just reconnect. So what that means is that if I have a 2 lot with a 12 tick stop and a 20 and 30 target, even if I put a limit order right here, whoops, let me actually get an account. If I put a limit order here, you won't see my stops and targets because I'm not in the market yet. If it hits my limit order, and I'm not saying that this is a trade, ladies and gentlemen, both my stops and my targets will now show up. If I need to move my stop, I can click that red line, put it 5 ticks below the trigger lines. I can move my first target to $100. I can move this target maybe to Fibonacci areas. And guys, obviously we're trading without momentum into a termination condition. This is not a real trade. If it hits my stop, it'll pull me out of the market. If it hits my target, it'll pull one contract out of the market and it'll hold the second for the second top. 12 ticks is not where the stop goes. 12 ticks gives you the reaction time to put the stop in the correct spot. Does that help, Bob? Great questions. I love it. Man, I think we've made it through the first hour. It took a little longer than an hour, which is pretty cool in my opinion because it means you're asking great questions and hopefully getting the answers that you need. So far today, what we've done is we have learned the trigger line and the Fibonacci rules for when it's okay to trade. We've broken them down individually and been reminded to keep it simple. You guys have the ability to simulate. You have a working set of software, NinjaTrader 8. You have a plan to follow. You have the ability to take pictures. You have the ability to post them in the room to get feedback on everything that you see and do. You have a trading plan that you can follow now. And guys, that KISS plan gives you the best of the best for the high probability trend trade. And then the second page is that potential to break trade, that 50-50 trade. And I want you to see, and Bob, this is why I talk about strong tops or bottoms, is you have to have a strong top or bottom. That's rule number 1 for the 50-50 trade. You have to know momentum, because without momentum, that area doesn't even have the potential to break, according to the rules. And you must have it on both charts, because if you're sacrificing a clear path, it's imperative that you're using momentum to try to break that area. And you have to know what divergence is. And we talk about divergence in the high probability trend trade, because if it prints, you're not supposed to take that trade according to the way it optimizes your chances of success. So you guys have rules, you have a plan, you have the ability to study it. You have my personal spreadsheet with all the ability to see the entries, to look at Nexgen client trades, to learn how to manage, to work on your basic rules. And guys, I've already got over 250 pictures. I've given you a huge head start on that 101. You have a place to track, and now you know that you have to come back and study it so that these looks become easy. You have literally everything that you need to be successful with the software. And I just dropped a zip file in there that says all you need, .zip, with everything that I've just presented to you. So the only thing that Nexgen can't give you is repetition. The only thing that I can't provide you is the desire to do the work that it takes to get good at this, to give you the courage to post in the room, to give you the discipline to use and study your spreadsheet. But you really do have everything that you need to be successful with the software. So I'm going to go over one more thing, and then I'm going to take a break because I think it's important to walk away every now and then. And Bob, this kind of goes back to, and Bob, I apologize, I feel like I'm singling you out today. This goes back to that question about strong tops or bottoms. So the key to everything that we do with this software for the brand new user is having a foundation, understanding the basics, and then each day, each week, compounding a bit, just a little bit, 1% every day. The Japanese philosophy of Kaizen, taking your lessons and getting 1% better every day. So for you new users, I blanket you with very conservative rules and the recognition of advantages, and I give you a solid plan that optimizes your chances of success as you learn to read your indicators. So for you brand new users, all termination conditions are bad. And for you brand new users, no momentum is bad. And areas beyond the large triggers for entry are bad. Blanket rules because it increases your likelihood of success. And they're not always bad, guys, but until you have the experience to know when to use exceptions, it's just safer that way. You're more likely to win more than you lose if you keep it very basic. And just like anything, the more time you spend with it, the more you'll see. This opens the doors for you. But you're learning the process that yields the results. That's all you're doing right now is you're learning how to execute the highest probability trend trade, giving you the best chance of success as a brand new user. And if you keep it that basic, right? If you focus on the simple rules, and most importantly, if you're okay, and I'm going to change keeping up with the Joneses because that made sense to me when I did it. If you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success, guys. And I've watched it repeatedly over the years. I've been doing this for a long time now. And the further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. The more you look for, the less you tend to see. So question everything. And this is a great example this morning, guys. I don't get put out by interruptions. I don't get put out by questions about what I'm talking about. I want you to question everything. I encourage it. And I want you to learn. But I also want you to give yourself a little grace, guys. You're new, and it's okay to be. It's okay to not be perfect at this, guys. I learn every day. You're going to do the exact same thing. So that's everything you need. And I present that because I think that's important to say as we go into the second hour, because we're going to see trades that don't fit the rules. And those just aren't your trades yet. But we're going to see a lot of trades that do. So I'll leave you with crude oil. It's heading to the upside, at least for now, but it's right into a termination condition. And when I come back, we'll start looking at all the pictures that were posted in the room. We will identify momentum, clear path, and entry on all of them. I will talk about the chart reads, and if there's anything I can see that's going to be helpful, I'm going to give it to you. So, guys, go stretch your legs. I'll see you in 5. I am back, legs are stretched, water's filled, dog has been pet. Let's get into that second hour. So as we get into the second hour, what we're going to do is we're going to talk about rules, guys. We're going to talk about momentum path entry. We're going to look at what you did. We're going to talk about what you did. I'm going to give you my 2 cents. Whether you want it or not, I'm going to give you my 2 cents. So what we're going to do is we're going to get going. So Joel got us going. And Joel says, let's check it out. Doing market replay, getting his repetitions in. So he had termination. It reverses the market. It creates odds favorable momentum. He has a clear path. And there's a beautiful pullback right to resistance, right inside of triggers. And Joel gets paid. This is outstanding, guys. This is the kind of picture that if you see it in the class, you should go steal it. You should open up your spreadsheet. And I'm going to put it in client trades. You could put it in your perfect look if you wanted to. But I like building this each day with you guys. So we're going to call this Joe's Perfect Short. And now when someone that's new goes back and looks at it, they're going to be like, man, there's that pattern. There's that pattern that happens every day. And then Cab says, check it out. Odds favorable, potential to break, pull back to an area inside of resistance, out at the fib. So once again, let's steal it. Let's steal pictures today. Guys, we're seeing the same pattern over and over. We're seeing those same strong triggers driving the market. We're seeing that clear path, that potential to break. And I'm stealing them. I'm going to fill up this spreadsheet today. Look at the momentum, guys. That's the key. And even with the potential to break, there's opportunities. Andy, you fell asleep on the... You fell asleep. That's okay. I got it for you. So guys, remember, all we're doing right now is we're going back and we're looking at patterns. We're looking at momentum. We're looking at path. We're looking at entries. And so far, Joel and Cav have done it great. Putting on some great lessons this morning for us. And then Jen's going to brace herself because here comes the lesson. And this is why I love pictures, guys. Odds favorable momentum. Notice that everybody started with that. Odds favorable momentum. Everybody said, man, look at these strong triggers. What a great way to start looking for a trade. And then Jen has a trade that says when the back of the bar clears the decision-making point, when all of the price action clears the decision-making point, that's what that means. She'll jump in with that momentum and see if it makes it to her target. And this one didn't. And Jen, you are in right at where it reversed. And guys, this is where you have to make a decision. There's nothing wrong with Jen's entry. This is just hoping momentum carries it. And this always seems to be Murphy's Law. Down it goes. But once you get that reversal bar, you have to make a decision. Either you exit because now that momentum that got you in is gone, or you have to keep your stop where the market shouldn't go. And with this look, where the market shouldn't go is all the way down here. And that is approximately $250 per contract. That's a lot of risk. I don't care for it. I'd rather re-enter. But everybody's different. And then Jen says, okay, with this look, I believe in the areas inside of favorable arch triggers. I'm gonna take my entry. And as it's coming down, she didn't wait for it. She's like, oh, I'm not gonna get in at that highest point of support. And then the market started going up. And Jen said, in her Jen voice, oh my gosh, That market's going to go without me. It didn't give me my entry. I better jump in. And she is in at the absolute highest tick of that tiny little fluctuation on the small chart. And then they said, oh, just kidding, Jen. We're going down to the areas inside of triggers. But Jen always knew where her stop went. So it's really no harm, no foul. All she did is she shortened the distance to her profit target. And then it hits, and she gets paid, and she gets out break even. And this is almost pretty much a break even trade. But I love this. Hey, good morning, 10K. Because this opens the door for an outstanding lesson. And guys, when you guys post trades in the room, it opens the door for outstanding lessons. So I did the lesson, and then Jen, I put your picture right next to it. And I'll share this with you guys. So number one is the jump in look. Guys, these are the three most common. Let me do it without Jen's picture. Hold on. I saved it because I love this picture. These are the three most common entries with new users. The first one's at the very top. This is the jump in look. This isn't a bad look with momentum and clear path on everything. That's just looking to ride the momentum, guys. It's cool. You're going to see that trade a lot in this room. But the reversal bar, you either have to be willing to have a huge stop, or be willing to exit and just say, dang it, this one didn't work out. And then the second most common entry that I see, guys, remember that the small chart is a tiny little chart, and there's going to be all these up and down ticks, and that's all they are, is up and down ticks. The only thing I'm focused on is the area inside of favorable or triggers. And if my fear of missing out gets me in at that high tick, that's the, oh no, it's going without me look, guys, and we've all done it. Don't act like you haven't. All this entry does is it reduces the distance to your profit target, and it increases your risk because your risk still has to go where the market shouldn't. And then finally, there's the perfect entry, guys. And this is why we talk about the best of the best every day, especially when you're not comfortable working through it in your head fast enough to know that if you get in here, your stop still goes here. You don't want to get stopped out at the area inside of favorable large triggers. That's the perfect one. This is the one with the least amount of risk, and this is the one with the highest profitability. And I put the two together, and I especially wanted to do this because I don't care how great a trader you are, and Jen, you are an outstanding trader. You are an unbelievable chart reader, and you give us lessons every day. This may happen, and the point that I'm making with this is that Jen always knew where her stop had to go. She was comfortable with her entries. She knew where the market was likely to go. She knew where it was likely to continue. She knew where it shouldn't go. Jen's chart reading keeps her in this trade, gets her some profits, and avoids a loser. So while there's an outstanding lesson for everybody, Jen, thank you for sharing that. Thank you for sharing the picture. Thanks for always being willing to let me make a lesson out of your pictures. But guys, if you're on day one, expect to take these entries. It's just going to happen. If you're on day 1,000, you may still do it. It's just part of it. It's just part of trading. And an awesome recovery. And then I want you to see something. And this was my favorite part of Jen's lesson this morning. Let me scroll back up. Let me see. Where were we? There was the first one. And then this is a different account. And this is the exact same trade. And Jen knew exactly where to get in. She didn't back up. She didn't scroll back and retake the trade. She literally took this on this other one. And she takes her perfect entry. And look at how much easier it was to make money. Pretty cool, right? So Jen knows the correct entry. Jen knows the rules. She knows exactly how to do it. She just didn't, and that's okay. That's a part of it. So I loved this one because a lot of times when we feel like we make mistakes, we start to doubt our abilities. And Jen, what you did is you verified and you validated that your abilities are exceptional. You just made a decision, but you went on autopilot with your chart reading, and it kept you safe. So great stuff. Gold went on a run, Marty. So I love that the first picture was followed with the second picture. Jen said, I didn't do it right here, but I did it right here. And then Andy, it's the same chart, same look, odds favorable, potential to break. You're in 60, 56, 4 ticks above, right? But that's okay. And then you're out before anything goes wrong. And that's fine, 67. So that's, my gosh, you were in at 60, you're out at 67 too. It's $140. It's not bad. But why did you exit? Do you have a 7-tick target? Or could you just not bear the thought of it turning against you? And it doesn't matter what the answer is. It could be either. But where you're exiting is on the good side of everything. It's a good look. Your entry's a little early. You're trying for 100 a bit plus. The right entry gives you that 100 easy, doesn't it? So there's the lesson on this one. The correct entry gives you that $100 easy. Yep. Great entries, guys. They create very manageable trades. Nice trading, Andy. It's good to have you back in the room. All right, let's see who's next. Cav. Someone gave him a chili dog, so that's nice. And there we go. There's that one I was talking about. When everything's going up, when the market's cranking, when the path is clear, there is opportunities to just jump in with that momentum. And Cav did it beautifully here. You're okay. You're okay, Andy. Cav did it beautifully. He let it get above anything that could bounce. He gets in with everything cranking up. And guys, look at his exit. It's quick profits on a trade like this. These aren't home runs. If all you're relying on is momentum, get in, get paid, get out, right? Cav knows that. Cav's been doing this a while. And look what happened right after his great exit. There's the reversal bar, and it came right back to the support and bounced up. And all he did was take a little snippet. Cav, that is rock star trading. Absolutely beautiful. And holding only enough for a base hit, not demanding a home run from a setup that isn't a home run setup. That's hard to do, isn't it? I mean, come on. Price strong, from a termination that reversed the market, odds favorable, everything down. There's your pullback. It could have gone from the mid-band. It could have gone from the one-to-ones. But Cav says, you know what? It's likely to retrace to the trigger lines. Price returns to the triggers. And he said, I'll just get in kind of right in the middle. I'll split the difference. Got in on the pullback to the large trigger. He knew it could go. Splits the difference. Knows where his stop belongs. Once he gets the reversal bar, there's virtually no risk. And down it goes. And Cav, once again, absolutely beautiful. Absolutely beautiful trading. Guys, do you see the strong triggers? That fib stopped printing. Do you see the clear path? All Cav had to do was pick his entry and get paid. Nice job. All right, let's see who's next. And then Bob, did I answer that one? We did. We answered that one. And I think we got your other pictures, right? We did. Okay, good. Steve Diego. So this is the NASDAQ. Steve has momentum, not even close to a clear path, right? So, guys, one of the things that I will do, and it's going to aggravate you. I'm going to tell you right now, it's going to aggravate you. One of the things I'm going to do is I'm going to remember everything you've done. It's annoying, drives my wife crazy. And let me look at your entry before I go. So odds favorable, and that's a termination. None of the triggers are really through. Maybe there's a hint. Okay. Not a strong bottom, but odds favorable. And where you're entering, it does have the potential to break. So, all right. So this is actually genius. You're going to like this. He says no trade, and look at the big untradeable bounce. Does everybody see that? The momentum is there, but this reversal bar came off of the fib without triggers through it, and that was this push right here. And Steve wasn't a part of it. Steve said, I don't want to do that. Let me wait for a little confirmation. And then everything comes up. And this look right here is the 50-50 look. Coming off of support with all the triggers up. That's what he's talking about with the strong bottom. And he says, hey, check it out. Everything on my chart says up. It pulled back to support inside of triggers. I'll get in on a reversal bar and I'll take that 50-50 trade up. This is brilliant. This is brilliant. So there's two great things. First, don't trade in determinations. Wait for the reaction. After the reaction, read your indicators. Everything's still going up. He gets confirmation, which establishes his risk. And absolutely beautiful. 2 contracts off at 200, 1 minute and 4 seconds. I love that you time your trades. I thought you were taking a chili dog, and you weren't. And great job. So let's look at the next one. Strong piggyback triggers through fibs and 1-to-1s. What does that mean? That means that the market is, man, it's not really a strong trending market yet, but everything says up. The back of the bar clears the decision-making point, and then the fib update gets you, right? That happens. So that wasn't there when you started. And guys, this is the exact same thing. Cav says with all that momentum, with everything going up, I'm sorry, Steve Diego says, with all that momentum, with everything going up, with the back of the price bar getting above the decision-making process, I'll ride that little wave of momentum. I'll grab $200 in 17 seconds. Momentum and path, ladies and gentlemen. When I tell you that momentum and path is the core for everything that you're going to be doing, that's exactly what I mean. Steve Diego, beautiful trading. Marty, odds favorable momentum, absolutely nothing in the way. Jump in, jump out. And there might have been room for 2 of those in there. Absolutely perfect. Momentum, path, find a way, guys. Beautiful trade. That's the chili dog. You're going to hear people talking about the chili dog in here. The chili dog is nothing more than momentum and path, jumping in, jumping out. Momentum and path. Get in, get paid, get out. Absolutely perfect execution. Cav. Same look. Only Cav takes it as the Nexgen momentum trade. So when you have that choo-choo train looking triggers where the smalls are riding the back, guys, this is what we call a strong trending market. 30 bars in the same direction. The smalls ride the back of the large. This is odds favorable momentum. This is the only time when that separation isn't mandatory. Clear path to the next fib. And what Cav does here is Cav says, let me get price break and snap back to that fib. This is Nexgen's momentum entry. And just rides it up. And I don't even know why you would exit there. But that's a great trade. That's 2 contracts, 12, 240. That's a $500 trade. And guys, it doesn't stop going until a close on the wrong side of the triggers. Beautiful trade. Momentum and path again, guys. How many times are we going to see momentum and path for the win? Wayne, momentum, path. The areas on the wrong side of the triggers here. So you get in on the correct side of the triggers in easy money. Your 51 fib isn't showing up on this chart for some reason. Great job, dude. Look at the pattern. Pull back to support of the triggers. Off it goes. The entry isn't perfect, so you took it. And you missed your heartburn trade right on. Great trade, Wayne. Awesome pattern. Awesome pattern, easy trade. All right. Cav. It's the Cav show today. Pull back off the divergent small triggers. Stayed above the blue fib. Placed a limit order under, inside of the triggers, just above the mid band. Manage the trade by moving your stop above the entry price. So 21.17, 21.17. So 50-50 trade. There's his entry, right at support inside of favorable large triggers. Because it was only the potential to break, he managed it closely. Nicely done. Nicely done again. Man, you guys have been busy today. Miss Jen, odds favorable, strong top, had a limit order here, did not get hit, so you jumped in on the way down, didn't matter. Easy money. Had it at trouble, ATM target sell 2 instead of 1, further target below, oops, that's okay. Still getting paid. Sometimes they're going to miss your order. You did a great job. Did a great job. And out at trouble on a 50-50 trade. I mean, perfect. All right, Irish Mike. Irish MKC, sorry. Confusing you with your brothers. Anything can happen triggers, but price clears all obstacles with room to profit. You do have momentum on the small chart, and it works out for you. Nicely done. Broke your rule number 1. Definitely broke your rule number 1. But with nothing in the way and the market cranking, it worked out nice. Great job. Once you learn your patterns, guys, it becomes easier. Learn them like a scholar, break them like an artist. Took a trade on the pullback to the large triggers. That's just momentum. 21.83, 21.83. But it looks like it's directly into Fibonacci resistance, Cav. So I have to point out, even though you got paid, you did trade directly into resistance. But it worked out. You let the sellers fight. They gave the reaction. There wasn't much of one. So you chose to enter on the way up and took quick profits once again rather than hoping because you knew there was trouble. Guys, once you know you're up, once you know what you're up against, you can manage a little more assertively. And I guess we'll go on that real quick and then we'll come back to Jen's because I want to say this. If you're looking at your chart and you're saying to yourself, I have this, I have this, I have that, let's get in the trade. Or you're saying to yourself, I don't have this, but I do have these, let me manage assertively. Or I do have this, but not that, let me manage assertively. When you know what's going right and you know what's going wrong, you know whether you need to manage or whether you need to just let it run, let it marinate. So let's go back to Jen's. Backup price clears trouble. Gets below all the decision-making zones. Odds favorable momentum. She gets in. And she says, with this look and nothing in the way, I'll suffer the pullback. I'm going to the fibs. Beautiful trade, Jen. Do you guys see it? We're seeing an awful lot of momentum and path here today. We're seeing an awful lot of momentum and path. And we're seeing an awful lot of success with it. All right, Rob, in at 60, at 625. I'm assuming that's the time. No? I'm trying to figure out what we're looking at here. Awesome on the first one. All the momentum, you ride the momentum and get out of trouble. And then it reverses. The potential to break doesn't happen when you get above the triggers where the market shouldn't go to the upside off of a termination condition that didn't break. You said, look at these small triggers, strong as all get out. Let me see if I can't get it up to the fib. Rob, I like what you did here, my friend. And can we celebrate the biggest victory on this one? Rob, are you listening? You didn't hold this one forever hoping that it would work. You said, oh crap, my advantage is gone, let me get out of the market. Nicely done, Rob. Great trading, dude. All right, Marty again. Marty says, I don't know if we've talked about this, but with all this momentum coming from here, he was cutting it close. 82.50 was the problem area. So you cut your profits just a little short, right? This is the one. This is the third trade here. Allowed you to pass your second eval in less than a week. About 30 full-time trading days. Congratulations, Marty. For those of you that don't know, I've known Marty since he was 12 years old, and I know that he's good at following rules. So I forced him to take a trading computer and the software and learn it. And he's crushing it. And he's crushing it with simplicity. He has one trade that revolves around momentum and path. And he's passing evaluations and he's following rules. And guys, I couldn't be more proud. And I'll say that in front of everybody in the room. Couldn't be more proud. All right, 10K, good to see you. All triggers clear the fib. Talking about this one right here. In after the reversal bar on the small. Got it at the pullback. Plus 11. Break even plus 1. If it goes to 77, you'll get paid. If it doesn't, you can't lose. I like it, 10K. Can I point out one thing because it's my job? Are you in here? Are you listening? And guys, this is the stuff that people are like, dude, Mark, come on. Whiplash time. There's no whiplash. It is all sunshine and rainbows, my friend. But I do want you to see this. You traded directly into a termination condition, right? You cleared this fib. Whoops. You cleared this fib. All the triggers got above that bad boy, but price reached resistance. And guys, I want you to see something. He says, I don't know if it's going to hold or not. I have absolutely no idea. I'm not just going to jump into this thing arbitrarily into a termination condition. What I'm going to do is I'm going to force it to go in the direction of my trade, and I'm going to get a better entry with an established risk, and I'm going to get the hell out of trouble, and I'm going to protect myself. And if they want to continue up, awesome. But if they don't, I'm not giving any back. 10K, I think you did this awesome. I think this is what it looks like when you understand what you're up against. I guess that's today's main lesson, guys. When you speak to yourself in terms of advantages, you also see the challenges. And all it means is that you get to put your management cap on and protect yourself into trouble. And 10K did it like a rock star. Odds favorable momentum, railroad triggers, in, out, over and over, up and down. Marty, does it ever get boring doing the same thing and getting paid for it? You guys ever thought that? I do the same thing every day. I love what I do every day. And what you're going to find is that the most successful traders that I work with, the most successful traders that you see in this room, are the people that are doing the same thing every day, that are doing the same entries, the same exits, the same management, the same advantages. Those are the people that really get to where they want to be. The people that become comfortable doing nothing when there's nothing to do, those are the people that get to where they want to be. You guys have put on an absolute just display of awesomeness this morning. So let's see where we're at. Crude oil. Smalls have returned to the large. It's right at Fibonacci resistance. The triggers aren't through. Do you guys recognize this as a termination condition? That's my first question. Does everybody recognize that as a termination condition? Can you give me a why if you do? Cool. Does everybody recognize 3 divergences as a termination condition? On the small chart, that's the first time you'll see it. So I want you to see how you can kind of take that small chart, big chart thing. Big chart already says, I'm not broken. Small chart already says I might push down a little bit. And then 10K, I don't know if this is the same trade, but it didn't go, right? But if you got in right here, you got paid and protected yourself into it. Wayne, I don't care about a pullback to the large triggers at this point, and I'm not sure even which direction you're talking, to be honest. Guys, I don't have momentum, and I don't have path, which means I'm missing 2/3 of my advantages, right? I'm missing 2/3 of my advantages right now. And Wayne says, but Mark, I'm an awesome chart reader, and I recognize terminations and multiple divergences. But Wayne, that pullback to the large triggers here, that's not rules met for that trade. The idea on this trade is that we get no triggers through. That's the difference. I know exactly what you're thinking, and it's also that the small triggers roll off of the termination condition. So this is the look on the small chart, but the large chart doesn't give you the rules met. Does that make sense, Wayne? I know exactly what you're thinking. Wayne's thinking, man, that's that 2004 edge trade. But first it's a termination condition, and then the small triggers have to roll. And Wayne, I know you have your own plan, but because the triggers got through, you don't really have an HBA trade. Bless you. Because the triggers got through, rule number 1 isn't met for every trade that sends you the other direction. Does that make sense? It doesn't mean that there's not opportunity, but there's not a Nexgen rule met. And what that means is that with every trigger up directly into support, with every trigger above it, there's not a lot of reason to take that trade yet. There's not a lot of reason to hope support breaks. Because my trend is up, my large triggers are up, my small triggers are up, and everything is above Fibonacci support. Right on. Then how did you know that it was? Oh, because you've got my pictures. I was like, how did you know? So that's where my head goes, and we'll see what happens. But with every trigger green, with the background green, with everything above support, did you hear that click in my head when I realized how you knew what the market was doing? For me, this is an absolutely no shorts. Let it break. Get to the other side of trouble. And then the opportunities become a little better. Doesn't mean that it won't go down, but it means that I am so void of advantages right now that I have no desire to wish or hope that it goes down. I'll force it to go down a little bit. I'll force it to go in the direction of my trade. Let me open up my S&P chart again. I forgot that I crashed. And Irish MKC, let's see what you're doing. Odds favorable, no terminations, in and out. I mean, come on. And guys, everybody's holding Marty to this. His first $10,000 month, he's buying me a new set of golf clubs. Maybe even a steak to go with it. Beautiful trading. On your Top Step account now, 3rd win in a row, 7th on the day, Throwdown Thursday. I love it. Momentum and path, ladies and gentlemen. Momentum and path. Doing awesome. All right, we're loading up right now. Ron's not even in here today. Ron said, I'm going to step aside and let it be the Marty and the Jen and the Cav show. All you chili dog traders. As that's loading up, I'm gonna bring up a document. And guys, this is actually in that everything you need file that I give out every morning. There it is. There's 2 things you need to know before you sit down and you're not on sim. And I say that you're not on sim because if you're on sim, you don't have to know anything. You just have to be willing to post it in the room to find out what you're doing right and wrong. But if you're not on sim, you need to know why you will enter a trade. And you need to know why you will exit a trade, guys. And you need these Because if you don't have it, emotions are going to take over. Fear is going to take over. Greed's going to take over. Why will I enter a trade? Because my rules are met. That's the easy answer, guys. Because my rules are met. Why? Because my rules are patterns that have been proven to win more than they lose. Guys, Nexgen has proven that the high probability trend trade pattern wins more than it loses. I've proven through my own study that chili dog trade wins more than it loses. I've gone back and I've studied it. I've taken pictures. I've annotated it. I've asked for feedback. True story, Ron C. in the room. He was my coach as I developed the chili dog plan and actually put it to paper from what he taught me in the room. And he gave me feedback to be able to do that. So when I take that trade, I have no hesitation. I don't have to know what's going to happen next because I know that the pattern wins more than it loses. And that takes a level of trust that most of us aren't willing to give as new users. Well, I've seen the pattern a couple days in the room, and I know people are winning with it, so I believe it. And guys, belief is not trust. Trust is putting that limit order 2 ticks above support when the high probability trend trade rules are met. Trust is not moving your stop because your gut tells you that the market may reverse against you. And what happens is when you trade patterns that have been proven to win more than they lose, it comes down to execution. And that removes the emotions. So one of the things that I like to talk about, because I say simplicity a lot, I say keep it focused a lot. If you're in a high probability trend trade, you've got the KISS plan, you know exactly what it's going to take to get you in. What's it going to take to get you out? And this page is called exit conditions. So initially, for the brand new user, it's just the KISS plan rules. It's moving stops because your rules say to move them. It's taking profits because that's where your rules say to take them. And then you start to recognize patterns, guys, and there's a million ways to use the software. Some people exit on a second higher or lower divergence, and they look for re-entry with a confirmation bar. Some people say if divergence prints from a 1-to-1, that's it, I'm out of the trade, no more. Some people get out at large chart areas. Some people look for 3 divergences in the same range. There's so many ways to do it, but simplicity keeps you focused on the best way initially. If you take one of those 50-50 trades, you have solid rules to get in. And then there's things that will get you out that are different. So learning one doesn't necessarily guarantee success in the next. So you have to start the process over with creating trust. And then when you add momentum trades and HVA trades, guys, there's so many ways to use the software. You've got to find your way to use the software. You've got to find your best path with the software. So understanding what it takes to get you in and out is such an important concept. So right now, prices reach the mid-band, and my large triggers are down here below the reversal bar marker. And what that means is that this could create a full reversal bar before or right at it hits those triggers, guys, which means price is more likely to close the gap to those large triggers, the same concept that we use for entries, which means that I'm going to pump the brakes and not look for a long opportunity in here. I'm going to wait and see if it closes the triggers, and there it is. Let's take that picture. And it happened while I was telling you what might happen. Does that make sense, everybody? How cool is that? Patterns that repeat themselves. This is what we call the gap theory. And the gap theory just means that if you accelerate a full bar away from those large triggers, hit something, it's likely to close the gap on those triggers. So if you thought you were going to go long at a mid-band inside of those large triggers and beat the system, the gap theory told you don't do it. Wait, close the gap and see what the reaction is. That's a pattern, guys. That's a pattern that you're going to see every day. And it's a pattern that's repeatable. It's a pattern that's very easy to identify. There it is right there again. And it's a pattern that's going to keep you out of a lot of trouble. There it is again. We'll see in consolidation. Almost there. Almost there. There it is again. Price closes the gap to the large trigger. So, and And then because this is a bad bottom, because that's not a termination condition that reversed the market, guys, very often the people in charge are looking for that next Fibonacci area. This reversal didn't happen from a fib or a 1-to-1 or even from a divergence low. There was no key area that created this reversal. So the market's likely, not guaranteed, to continue with the overall trend. But we've got to clear trouble here first, because right now we do have a termination condition. Price reached the area, triggers are above. We don't have any areas inside of triggers, guys. So understanding that idea, I think I'm crashing my... Man, I just rebuilt too. Give me just 1 second. So guys, I'm doing a lot of talking here. I would love it. I would appreciate it if you guys would do a little talking. What do you want to learn? What do you want to talk about? What do you need help with? What are you focused on this week? How can I be of service? I want to take that picture and I'm going to send it to Ron Marty. Now guys, I know we're all brilliant here. I find it hard to believe that out of 31 people, nobody has one question. Nobody has one question about anything. Everybody's making more money than they can spend and they don't need any help. That's awesome. I need a raise. On the ES just now, can you repeat if they turn from nowhere, the mid-band is more likely to hold? Absolutely. So what we're talking about, Tony? Thanks, Marty. I did, Rob. I sang your praises for days. Did you miss it? Repost it. I will do it again. So we'll do a couple of them. And I'm going to do this one first. So Tony, obviously it's not a guarantee, right? Nothing is ever a guarantee. If the market's been in an uptrend and it doesn't hit a key area, it pulls back. So if you have a bad top, when you get to the mid-band, when you get to fibs, especially if the large triggers are a full bar away, very often the market looks to continue in the direction of that trend. And where's a good strong trending look? That's a pretty good one. There's a bad bottom. They pull back up to resistance mid-band and it goes back down and eventually it continues with the overall trend. But you can start to use the idea, and it's more prevalent in... That's a good one. Termination, full reversal, everything down, bad bottom, gets to the mid-band, large triggers don't follow, continues the move down to the next key Fibonacci area. Let me open up the S&P and we'll see what it did. We'll see if the S&P, or if you can show me a picture even. Either way, I'll tell you what, let me get my S&P opening and we'll look at Rob's trade. Rob, I don't know what the 625 out at 641. I don't know what this means, unless it's the timestamp, which is cool. But what I was saying is that you've got momentum, right? And then this is your problem. This is what you told me to help you fix. Directly into a termination condition. Times don't do me any good because they don't line up on the two charts. Prices are always better, and I can see them. So you enter with momentum, and it looks like you exit, I can't see the price, with a loss of momentum, which is nice, dude. One in, one out. You're in because of momentum. You're out because momentum is gone. So that was the first praises that I sang you. Good job, dude. You didn't hold forever hoping stuff worked out. Your second trade, the 50-50 fails, the small triggers roll, and they are cranking up. You already had a divergence, and you waited for the market to get above those triggers. You waited for it to get to where the trend trade would have failed, and with all that momentum, you took it up to the fib. So the first trade directly into a termination condition, that's the one problem that you need to fix, right? That's your challenge right now, and you went right into it. You were hoping momentum would beat terminations, and it did for a second, and then it lost horribly. And then you took momentum and path, and it was pretty easy. Did this one feel easier than this one? Second trade feel easier than the first, maybe? And that's what I want you to remember, Rob. I don't want you to remember the money that you made. I want you to remember that when you didn't trade directly into something, it felt easy. That's your lesson today. And it's beautiful, dude. You did such a good job. And I certainly don't mind singing your praises twice, because you're beginning to move past the thing that seems to take your money, trading into termination conditions. So even though that one made 150, F that trade, right? You don't need that trade. Not when you're doing stuff like this. Good job, dude. And then I'm not loaded yet, Tony, but do you see bad bottom? Mid-band triggers didn't follow, but you still have to respect the termination condition. So what does this tell me? We had a huge downtrend. Oh, don't crash. Damn it. Don't mess with your charts when they're calculating, guys. That's my bad. I tell my wife that all the time. Stop clicking, stop clicking, stop clicking. You're going to crash them. And then I did it. So she's over there writing down a note to give me shit when class is over. Let me pull it back up. But Tony, you see how it continued back down with that gap theory? And just because it's the gap theory, right? Just because it had the potential to go to the next area, it doesn't mean you can ignore termination conditions. So the gap theory got it to the large triggers, and they tried to push to the next area, but that line in the sand created by the buyers, did I take a picture of that? That line in the sand created by the buyers, and this is the lesson I wanted to get, guys. When everything is cranking down and it's not coming from an area, that loss of momentum isn't a termination condition. It's a line in the sand that says, all right, sellers, if you try it again, this is where we're going to fight you. Does that make sense? If you try it again, if you try to come back to 60, 57, 50, we're going to fight you. We've already told you once we don't want you to go down. This line right here is exactly where we're going to unload on you if we decide that we want the market to go up. So even though it has the potential to continue down, we still have to respect that termination. Still have to respect that line. And sure enough, they unloaded everything, didn't they? It doesn't even matter if there's a second divergence. All the second divergence means is that they lost momentum again. But this is an awesome pattern. Hopefully, okay, I'm done. Bad bottom to the mid band. The potential is to the next fib. The potential is even stronger if the buyers didn't put that line in the sand. But now this is a beautiful termination condition. Absolutely no short trades. And I see people taking the short right here, Tony. My brother calls this pattern bad bottom, mid band, fib. He calls this unfinished business. Whoa, what did I do? Hold on. That's not what I wanted to do. Get back up there. So he calls this look unfinished business. They are. They're very powerful, Kurt. An unfinished business is a very real pattern. That's what the pink arrows are. The white arrow, this is where I'll see people say, I took a short because of unfinished business. Pattern. But what I really want you guys to say is no shorts and determination. Why? Because more often than not, this is going to stop the market. More times than it doesn't, this is going to stop the market. So recognizing the unfinished business pattern is great. It's more likely to work if there's not a big termination condition right there, because this turned it into a strong bottom, and now the market's more likely to go up, and sure enough, there you go. Pretty cool, right? All it is patterns. Guys, these are patterns that happen every day. This could happen, but my rules aren't met. Therefore, I choose not to trade. Just because you know what could happen doesn't mean that there's a trade. It means that you're recognizing a pattern first that kept you out of the long trade. Right there, right? I'm not going long. That's the gap theory. And then it said, well, I can't go long here. My rules aren't met. You too, Cav. But I'm not going short here because it's directly into a termination condition. And egads and little fishes, 3 divergences in the same price range. And from those terminations, there's the Nexgen top momentum trade. And guys, that trade is still screaming to the upside. First, it's a termination. Small triggers roll, pulls back. That's a momentum trade. Isn't that awesome? It's just a pattern. Love patterns. Patterns make me happy. All right, Rob. Not a clear path. Whipped your ass. Clear path. You made money. Stop telling me about the money, Rob. Brag about following rules. You have never bought me anything pretty with your winnings. You don't have to tell me about your money. Tell me about your rules. Rob, what I want you to annotate these charts with. This is what I want to see on your charts. No clear path, and it whipped my butt. And then I also want you to say, momentum and clear path, and making money with this look was easy. And then I want you to say one more time in the biggest font, right? All caps. Why the F do I trade into lines? That's your annotation, Rob, because this is twice where momentum and path has produced easy results, and this is twice where trading into areas has jacked you up. Guys, I told you, I'll recognize your thing. I'll recognize your thing, but Rob, if you're not taking these pictures and putting them into the spreadsheet, and over here, stop trading into terms. It's killing me. If you're not doing that every day, Rob, you're going to find yourself in this break-even existence, right? You're going to find yourself in this break-even existence where your great trades, all they do is cover the tracks of your mistakes. Good job, dude. You've got a very definite pattern. How long have you been in my room? Here it is right there. 2 years. For 2 years straight, I've been talking about how to do this. So now, Rob, it's time. Let me give you the spreadsheet. And exactly how to paste them in the room is right there for you. Exactly how to annotate them, is in the room. And we'll come back and do a lesson on that too in just a minute. So I'll give you a visual in just a second. Marty, odds favorable, momentum out of trouble. Dude, this is old. I'm tired of seeing the same thing from you. I'm sick of watching you make $900 with momentum and path. Just kidding. I love it. Don't you ever change. In with space, out at trouble. Large crowd says, screw your fibs, kept running, but I didn't get greedy. And you know what? They did that time, didn't they? In the other 75 times that they reversed off of that fib, you're going to be glad you didn't get greedy. Great trading, dude. Nanda, I mentioned the large chart is a large crowd. Is that true? The small triggers for the small crowd and the large? No, it has nothing to do with trigger lines, Nanda. Great question. Great question. And let me go into the analogy. And let me bring up the picture. And why I talk about large crowd and small crowd. I describe the large chart as the large crowd because it's such a big, broad scope, Nanda. It's a slow-moving chart. It's hard to see change. And when it's going up, it takes a while for it to go down, right? And when you have odds favorable momentum up, it takes a minute. It takes a little bit to slow that down. Does that make sense? It's like this giant force. The small chart is a smaller, and you see their dance in the big picture. You see the little fights that are never evident on the big picture. So that's where small crowd, large crowd comes into. Don't overthink it. Good stuff, man. That's a great question. And one thing that is true and has been for the history of Novak men is we're horrible at analogies. So if analogies don't make sense, make me explain it. And now that my wife's home today, I can have her come in and just tell you what it is I'm trying to say, too. All right, so Rob, let's post a picture. What do you say, bud? You use Snagit, right, Rob? I'm going to use whichever one you use. You use Snagit? Okay. So I'm going to pull up my Snagit, and I'm going to go to the market. And I'm going to right-click on that big capture button. And you know how to take the picture. So take the picture. And you're good. And you annotate. And everything's all right. And then, Rob, over here on Share Link, drop down, Screencast. I noticed that you copy-paste in the room. Is that right? No, you put the links. Great. So you have the links. Awesome. So get your link. And you know how to do that. So the same way that you posted in the chat box, I just want you to paste it right here. That's it. And Rob, if that's as far as you get, don't trade into terms, that's fine. That's plenty. You can still come back and click this link. But if you leave the link, if it's the whole link, you have to hit Control to see it. Does that make sense, Rob? And then James, I'll get you in 1 second, bud. So what you can do is you can go to the link button or the insert button, click on the link button, and just paste that address in there again and call it Rob is awesome, right? Or whatever it is. And now you've got a link that all you have to do is click on it. And I know that was kind of quick, but that's exactly what those are right there. Rob, pasting into the spreadsheet part 1, pasting into the spreadsheet part 2. That's it. All right, James, you can't get capture and Snagit. The alphabet will not work on either. Nexgen Tech hasn't helped, isn't able to help. Okay. And Jason is amazing, but Nexgen isn't TechSmith. So the challenge is alphabet will not work. Snagit search, search links, Snagit shortcuts. So what we're doing is you're saying that call out isn't working. So let's see what that does. Call out tool. Add a call out. There's all of the bodies. Delete a call out. Tool properties. All of your fonts. Changing colors. Changing shapes. Changing shadows. Font properties. Arrow style if you want one. Advanced properties, formatting, tutorial Snagit version 2024. And then for unexpected behavior with Snagit, visit the Tech Center. Questions about software keys, lost software key, didn't find what you need. Free webinars, how to, and then of course, guys, contact them. And I'm sorry that you're struggling with Snagit or Capture. And I don't know why. And sometimes uninstalling and reinstalling fixes it. But Jason isn't trained in this. And I don't know if their tech isn't helping or our tech isn't helping. Because when connect to share, everything works. When you say connect to share, everything works. When they get on your computer to do it, everything works. Check it out. There's that gap theory again. No trades into the mid band because the large triggers are a full bar away. But it doesn't work when you're just doing it. So which do you prefer, James? Capture or Snagit? And we'll see what we can do for you here. Do you prefer to use Snagit over Capture, or do you prefer Capture over Snagit? I'll try and give a little tutorial on both. Careful, Kurt. Marty's got a weird brain. He's going to complicate everything. Just a little heads up. Okay. So let's take a picture real quick. He's brilliant. Maybe too brilliant. All right. So I'm going to go to... So you're saying your call out doesn't work, right? You can't type. Okay. So I'm going to do this. I'm going to take a picture with my Snagit of this. Uh-oh, hold on. That's not the picture that I wanted. 1 second. Nope. I did it again. All right, this will let me get the good one. All right, so common mistakes. Not even mistakes, just common issues that people have. The first one is that font and background is the same color, and that's too big. That was the big stuff for Rob. So let me make that a little smaller. So that's the first challenge, is that the background and the font can't be the same. The second one is if you don't see the blinky vertical line, you're not in there to type. These are the two most common things that keep people from being able to type. So I always say check these first. And usually, so there's two things. Let me get it. So if this is white and that is white, you'll never be able to see it. Blinky line thingy. And check it out. I just typed a whole bunch. And if I highlight it and change it to purple, you can see that I just typed a whole bunch. Yeah, I know, not everybody knows what cursor is, but everybody knew what I meant when I said blinky line thingy, right? Remember, Wayne, I'm speaking to the masses. So make sure that the background color, and these are different, because if they're not, you'll never see it. And then the other thing, James, if I click off to the side, like maybe I did my box and I said, oh wait, I got to do an arrow right here. You'll notice that the cursor isn't blinking. So no matter how much I bang on my keyboard, it's not going to give me anything. But if I double click, now I'm in business. Were either of those the culprit? Usually it's the font. And then Tony, bad top, mid-band holds, unfinished business would get it to the fib. Did you notice that there's not a divergence high here, so I don't have a termination condition now? Let's see if we get a different result. Does that help, James? I hope that helps. I hate being frustrated. And the blinky line never works. Maybe you don't tap fast enough. So let me go back. Oops, I'm messing up. I'm going to take another picture. So I'm going to do the call out, not the arrow. And I'm just going to make the cursor huge so that it's easy to see. So if there's not the cursor, James, if I click once, it doesn't give me the cursor. If I click once and then twice, I'm trying to make it so you can hear my clicks, there is no cursor. If I double pop it, pa-pow. Pa-pow is the sound that it makes, James. So you can't just click one, you can't slow click twice. You got to rapid fire that mofo. And then we're good. So try that. Go drink a highly caffeinated beverage and get that clicky finger full rockin'. See if that helps. And unfortunately, I'm not a tech guy, but those are the mistakes that I've made. And again, is it TechSmith support that's not being helpful? Because if they're getting on and they're able to make it work, or even if Jason's getting on and he's able to make it work, there's a really good chance that it's user error. And I know we hate to admit that. But I have been the errant user more often than not. Yours never had a cursor? You thought that was normal? It takes a really fast double click to get it to show. So I hope that was helpful. I try to be helpful. I always try to be helpful. Tony, are you watching the pattern? Bad top, all the way to support. Triggers didn't follow and it closes the gap. Gap theory right to the large triggers. And this time it didn't have the divergence high, right? It doesn't mean that it's got to go up. You might get 3 divergences over here. But this look has a better chance than the one going the other direction for sure. But you still don't have momentum, right? You do have a clear path. And you really don't have favorable large triggers. So we're waiting to see what the reaction is right at those trigger lines. It doesn't mean there's a trade yet. But it's better because of no divergence. Why? Because right here, Tony, whoops, right here, I don't have a termination condition. Right here, I had a termination condition. Do you see the difference? Totally different expectations. I love it. This is a good pattern. And there's different schools of thought. Some people will say, oh, you know what? When I get above it, I'll just see if I can get it. I'll see if it goes and finishes that business. Sell stop market 1. And if it gives me a down bar from here, I'll exit. If not, we'll see if they finish that business. That's a pretty common look. I see a lot of people do that. And that's a pretty good way. Wait for everything to agree. You recognize the pattern. It's very low risk. A reversal bar will take me out here in the trouble area. And then if we break above it, we'll see if they make it to the fib. I'm not saying this is a trade. This isn't a trade that Nexgen teaches. This is a look that I've seen people do that gives you a lower risk opportunity to try to capitalize on a pattern. Does that make sense, Tony? And as long as I don't get a reversal bar, as long as I don't get a down bar, the market's gonna go up because I'm on the left side of the triggers. So I can just chase that reversal bar as long as it wants to go. Every bar that prints up is another tick of less risk that I'm gonna have on this trade. You're welcome, Andy. I am too. And guys, this is not any trade that I've ever taught. This is just, we're looking to see if momentum carries us. A reversal bar would be that loss of momentum. Are you willing to give up 6 ticks for the potential to hit the fib based on a pattern? That's all it is. And notice that they're sticking right at the pink line. And now they go up. And now they're clearing the trouble, and the risk keeps getting less and less. I'm down to 4 ticks risk on this trade, which is $50. I'm risking $50. What's 6 points to make 300? That's not bad, is it? And now look what my triggers are doing. Now they're starting to accelerate up. My large triggers are up. My small triggers are up. Every trigger is up. I haven't closed below triggers here. I'm starting to get above the divergence that could create a bounce. It just keeps getting better and better. And it's just a pattern. And I know exactly where I want to exit if things go south. It's fun when we can add little lessons, right? Is it a trend trade, Tony? It's not. Is it a momentum trade? It can't be. I don't have momentum on both charts. What is it? It's a man, I sure hope the unfinished business pattern works. And if it doesn't, it's worth $50 to me. Not one Nexgen rule on the table here, guys. And do you see it dance around that pink line? That's why you chili doggers, Kurt, pay attention. That's why you let price clear the trouble on both charts. Because even on a small chart, decisions can be made right at those lines. Fights can happen. And if you're in a tight risk trade, it becomes problematic. Chili doggers are probably waiting for this bar to break above and for the back of the price to clear. And we'll see. We'll see if we can take that entry too. Just for grins. And there go the chili doggers. So sell them at 1, 225, 450. There we go. That's a chili dog exit. And look at this. There's my reversal bar marker. My wife was late. I heard it. Oh, that's okay, Steve. I'm sorry to hear about your mentor. There we go. There's our first target. You chili doggers just got paid. Chili doggers just got paid. You other guys that got in on this one, you have absolutely nothing to lose to see if it goes. Oh, yeah. Cameron did get sick. Yeah, Steve. What do you need help with? Great trade, Jenny. Getting into the simulator. So, have you opened your charts? So you have to open NinjaTrader. Let's do this real quick. Software user guide. So this is your how-to everywhere for NinjaTrader. So first, man, they're so close, right? Are they going to make it with all that momentum in a clear path? So the first thing you're going to have to do, Steven, is you're going to have to open NinjaTrader. And then you're going to have to open your workspaces. And then you're going to have to, then you have full access. I am going to, because I think this is one of those things that's easier to get walked through on your computer why you look at it. There's a link to tech support. Let me close out of this. Why do you need to rebuild, Steve? Because you have fibs where I don't? So, Steven, give me 1 second and we'll open it up. I'm sorry, Tony. I've got so many things going through my head right now. Why do you feel like you need to rebuild, Tony? I'm talking to two. Steve, I got you. Okay. So, you have the same fibs as Tony? Okay. Guys, you got to remember, I do stuff to my charts every day. There's your unfinished business. I delete things, I add things, I change things. I might be running different data. I did a full rebuild yesterday. There's a million things that can change it. Trade your charts. Trade your charts. I can't stress that enough. But yesterday, I did all, so I rebuilt yesterday, Tony. I redid my charts, my templates. I deleted all of this, repaired and reset. So I may just have fresh data. And that could be the difference. But guys, there's your pattern, unfinished business. It's a different look when there's not a termination condition. That's the lesson, right? And we made a couple $100 on the way up. Pretty cool. All right, Steve, let's do a tutorial. So let me close out a NinjaTrader. And this is how we'll end class today, guys. So hold on. Do you see your NinjaTrader icon? And James, were you able to double click fast and get it? And Tony, maybe rebuilding would change. Maybe it won't. Maybe it's me. It can always be me. Steve, give me a Y, please, if you have your NinjaTrader icon where you can find it. Okay. Did you update it? And then James, you got it? Awesome, dude. This is why I am the smartest man in the room. Double click it? I'm not really, guys. Well, log in for me. Go ahead and log in. Whoops, my cap locks are on. I'll log in too. We'll do it together. Oh, well, Steve, you can't get to the simulator if you don't have the password, and I don't know your password. So once you put the password in, it's going to look like this. You're going to have to make sure that you're connected. That's that green dot. It should come up by default. So log in and you get this. Make sure you're connected. Oh, yeah. I can't help you with that, unfortunately. You can go to NinjaTrader and maybe reset it. Or do you remember what you guys called the file? Do you remember what you named the file? Did you call it Ninja something? Or did you call it password? Or maybe NT? You found it? Cool. So log in, and then once you log in, make sure you're connected, open a workspace. And all of that is in that link that I dropped in the room. Whoops. Open NinjaTrader 8. Look at this. It walks through everything. Once you're open, connect. Click the workspaces. That's how you do it. It'll literally walk you right through everything that you need there. And then once you're in a workspace, Steve, all you have to do is play. Make sure that it's on simulator and have a great time. Let me find. And then just play with it. It's simulator. You can't do any damage. And I'm looking to see if I can find a picture. My brother didn't put any of the pictures on there. But it sounds like you're there. As long as you have that and follow the link, it'll show you everything you need to get in, to get connected, to get to your workspace, and then it's just a matter of just simulating and having fun. Practice everything. Practice moving your charts, practice entering, practice exiting, and then bring all your great questions to the room tomorrow. and we'll get you squared away 100%. So I'm going to kill YouTube real quick.